Good morning, all. We are back on the record. Today is, what, Friday? Thursday, and the time is 9 o'clock. And thank you all for coming back today. You know, I think I can see some light at the end of the tunnel here, and that's a good thing. That should be an encouragement. Everybody looks real bright-eyed and bushy-tailed today, so I'm looking forward to a good last session of our hearing. Anything that needs to come before the chair before we continue with witnesses? Counselors?
I don't have anything.
No, Mr. Chairman.
Okay. At this time, then, I will ask if there is any public comment. Anyone who has public comment will have an opportunity now and also at the end of the hearing, whenever that is. So please come forward if you'd like to offer comment. Looks like not. All right. Well, we were in the middle of intervener Northwestern Energy's witnesses yesterday. And Ms. Hill, would you call your next witness, please?
Thank you, Mr. Chairman. Northwestern calls Kelly Schermerhorn.
Ms. Schermerhorn, have you been sworn in? Very good. Thank you.
Good morning. Could you please state your name and business address for the record?
Yes, my name is Kelly Schermerhorn, Kellermerhorn. I work for Northwestern Energy at 11 East Park Street, Butte, Montana, 59701.
What's your title with Northwestern?
Senior Energy Analyst.
I believe you have two documents before you marked as Exhibit NWE 6 and NWE 7. Let's start with number 6. Could you tell me what NWE 6 is?
I have NWE 7 in front of me, and it is my intervener testimony.
And is the second exhibit NWE 8?
That's correct.
And what is that one?
That is a corrected PPA that was filed here just a few weeks ago.
Did we file that corrected PPA with our pre-hearing memo?
That is correct.
Okay. Other than those corrections to the PPA, do you have any other corrections to your testimony?
I do not.
Could you state, just at a very high level for the commissioners, what topics your testimony covers?
Yes, my testimony covers the appropriate duration of the power purchase agreement, the appropriateness of a carbon adder in the power purchase agreement, as well as certain sections in the PPA.
Mr. Chairman, Northwestern moves for NWE 7 and NWE 8 into evidence. It's Ms. Schermerhorn's testimony and the corrections to the PPA.
Any objections? Mr. Uda, do you have an objection?
No, Mr. Chairman.
Okay, great. NWE 7 and NWE 8 are admitted into the record.
Thank you. Northwestern tenders this witness for cross.
Ms. Schermerhorn, do you have CBC, your response to CBC 91?
I do not have it in front of me, but I will shortly.
Okay.
I have it now, Mr. Uda.
Thank you. Could you please state, there's a quote from your testimony on page KMS 11 in this data request. Would you please read your response for the record?
Yes. I wrote, "It is important to understand, however, that this NREL report is not a direct study of QF projects that are paid under avoided cost methodology, rather than paid a market-based rate for the power they produce. The difference between an avoided cost rate and a market-based rate is fundamental to this discussion. Also, An avoided cost rate represents revenue certainty throughout the life of the contract relative to market prices. Revenue certainty translates to risk reduction and ease in financing.
Right. So my question about this response, is it your understanding that the NREL report only analyzed market-based contracts?
It's my understanding that there were a variety of contracts in there, but they were primarily index-based bilateral power purchase agreements.
Okay. And do you know of any market-based rates in the state of Montana that Northwestern is currently buying from? Any projects selling at market-based rates at Northwestern?
There are some index-based PPAs. There are some index-based QF contracts in our portfolio.
And those are sort of, I don't know how you want to look at it, legacy QF contracts that have been around for a while?
Not necessarily. Under the QF1 rate option, a QF producer has the option of selecting
Right.
an index-based rate.
Have any of those QFs subsequent to their first contract, strike that. What I'm trying to get at here is, do you know whether or not most of those QF contracts that are currently taking at a market-based rate are below 3 megawatts?
I can't say for certain.
Okay. Do you know whether those QF contracts who are currently being paid on a market-based rate all entered into contracts prior to 2010?
I can't say for certain without my list of PPAs.
Okay. Are you familiar at all with, for example, the Martinsdale Colony contract?
I am generally familiar with that contract.
And did the Martinsdale contract, was it entered into at a market-based rate in the range of 2008, 2009?
That was before my time with the company, and so I would have to check the rates and duration of that PPA.
So are indexed-based rates the same thing as market-based rates?
That was my suggestion. Yes, they are the same.
Okay, but doesn't market fluctuate depending on how you're looking at market, sometimes from minute to minute, hour to hour?
Index-based rates have a published index for power at Mid-C, and they pay according to that index.
Right, but what I'm saying is you're not drawing any distinction between an index-based rate, something that's tied to some objective measure, such as an index like you're referring to with Mid-C, and just a market-based rate.
Perhaps, too close, sorry. Perhaps the distinction is that in a bilateral negotiation between two willing parties, they could negotiate an index or market-based rate. The market-based rate could reflect things other than what is in the Mid-C index or whatever the applicable power index is, but that's generally a distinction.
So do you know of all of the contracts that are included in this NREL study, how many of them are fixed-price contracts versus how many of them are index-based contracts?
I don't think that data was in the NREL study.
Okay. So how do you draw the conclusion that the NREL study is unrepresentative in general of 20-year of PPA's duration unless you know what the mix is?
We are talking here about a QF rate and the avoided cost for a QF rate, and so drawing a conclusion from an NREL study that doesn't study QFs is likely not relevant.
Okay, so your conclusion is that because NREL, well, let me back up for a second. If you don't know the mix of contracts, how do you know that none of them were QFs?
I know they were not QFs. I looked through the supporting documentation.
Okay. Okay, I'm confused by that, but that's okay. We'll let that go. But do you agree that virtually all PPAs, both QFs and non-QFs, have revenue certainty in that they're paid a fixed rate?
I think you can price power under a power purchase agreement in a bilateral negotiation using a number of different factors.
Well, that's true, but in order to get a project built in the first place, don't they have to go to the various financial institutions and equity markets in order to attract investment? And don't those people want to know whether there's revenue certainty in the contract?
They would like to understand the cash flows associated with the PPA,
Right.
yes.
And if the cash flow is interrupted or intermittent, that causes a concern for those lending institution and equity markets, correct?
I think if they can find a notional value of the contract that fits their cash flow needs, it doesn't quite matter how that revenue is achieved, whether it is intermittent or not.
Okay. So of all of these QFs that you've identified in Montana that have entered into market-based rates, do you know whether they were follow-on contracts?
Could you please define a follow-on contract?
Well, their first contract expired, and they entered into a subsequent contract. And I'm asking whether in that it was that subsequent contract where they entered into market-based rates.
Because they started as QFs, those renewal contracts, that's the term I would use,
Okay.
would be a subsequent term.
Okay. So subsequent, these QFs you're referring to at market-based rates, are those projects already built?
Yes.
Okay. And are those the only ones that you can identify in Northwestern Service Territory?
I can only speak to the QFs because those are the only contracts at Northwestern that I am familiar with.
Okay, but what I'm asking is, are there any other QFs other than the ones I've just identified that had, I can't remember the term you used, it wasn't follow-on, what was it again?
Renewal?
Renewal contracts. Can you identify any others?
Again, I would have to look at my list to point out specifically which were in renewal following the expiration of their primary term.
Okay, so my understanding is that there are roughly 5 10-megawatt projects, and I think we heard about one today that was, or yesterday, that was having a problem meeting its 10-megawatt limit. Are any of those 5 10-megawatt projects selling at a market-based rate?
Again, I would need my documentation in front of me.
Okay. Are you familiar with what was called the Great Cliff Project? I'm not sure what you guys are calling it now.
Somewhat. I've been with Northwestern for 4 months, so the negotiations of that agreement precede my time with the company.
Okay. Do you know whether they have a fixed rate contract?
I do not know.
Okay. So if I were to ask you a bunch of questions about a bunch of projects, your answer would likely be you're not really sure.
Without my documentation in front of me, I don't want to misrepresent the agreement, so that is
I
correct.
understand. All right. I'm going to move to another subject matter here. Well, first of all, let me back up for a second. Ms. Schermerhorn, you mentioned you've worked for Northwestern for 4 months. Is that correct?
That's correct.
And where were you before?
I've been in the industry since 2008. I have worked in utilities throughout Colorado. I started my career with Source Gas, who was acquired by Black Hills, moved to Xcel Energy in 2015, and I was there for 4 years.
Okay. And let me understand a little bit about your background. Are you a lawyer?
I am admitted to practice, but I am not a lawyer for Northwestern.
Okay. You're admitted to practice in Montana.
That's correct.
Okay. All right. So, in this difference of opinion about the power purchase agreement that we've gone back and forth and back and forth and back and forth, I think 7 times your counsel said, or something like that. Can we agree that the security that's required is $40 a kilowatt?
We can agree, however, I think there's some discrepancy on what the nameplate is for the facility depending on the version of the PPA you read.
Okay. Do you now agree that the nameplate capacity of the installed wind is 60 megawatts per project?
The installed wind is 60 megawatts.
Okay. And can we agree, have you been here for the whole hearing?
Yes.
Okay. Can we agree that CBC has testified here that the hybrid output would be 60 megawatts per project and not 80 megawatts per project?
I have heard the hearing, but I don't think that I can agree with that based on what I've read in the PPAs that have been exchanged. They indicate a nameplate of 80 megawatts. Also, the FERC 556 documentation that was submitted with the application states 80 megawatts for each project. So I operate under the impression, prior to this hearing, that they were each 80 megawatt projects.
Okay, but your understanding from the testimony that's been presented here at this proceeding is that the purpose of the batteries is essentially to firm the output of the wind, correct?
I have heard this through the hearing.
Okay. And so it's not that they're going to be discharging the batteries separately apart from the wind, correct?
I don't know how they're going to operate their batteries, sir.
Okay. But we can agree, at least as a matter of math, that that 80 minus 20 is 60, correct?
That is correct.
All right. I know that's a really trick question this early in the hearing, so.
Real important to get that on the record.
So I gather what you're saying is you're not sure what the security should be based on, whether it should be based on 60 megawatts or 80. Is that what I'm hearing you say?
That's correct. We set our security requirements for these QFs on a standard basis for all of our QFs to adequately protect our customers.
But you would agree with me that this is sort of different, unique, however you want to term it. It's different from, it's not just a wind project. It's not a solar project. And so how you would look at what security should be based on might be different in this case. Is that fair?
Again, the PPAs I've seen reflect 80 megawatts, and so the security is 40,000 per kW, which I believe is $3.2 million for the duration after COD.
Okay, so let me ask you this question. So I think you said that I don't know, I'm going to put words in your mouth. I think you said essentially, and if you want to correct me, please do so, that you're not comfortable that it's 60 and not 80. Is that right?
That's correct.
Okay, so what would Caithness have to do to convince you it was 60 and not 80?
Again, the documentation I've seen filed at FERC, the nameplate on the contract all say 80, and so I think the project would have to be represented as a 60 megawatt project in those types of documents for me to feel comfortable.
So you're suggesting they amend their 556 to show 60 megawatts?
I'm not sure how they would get there, but the documentation that I've seen reflects 80 megawatts.
And you've reviewed all of the draft PPAs?
Save for PSC 004 that was recently submitted, I haven't spent extensive time with that, but I'm generally familiar with it. I am familiar with the documentation that's been submitted prior.
Right. So is it your representation that PSC 004 represents 60 megawatts or 80 megawatts?
I'm going to look through it.
Sure.
If you look at the definition of nameplate capacity on red line page 12 of PSC 004, it says for the purposes of this agreement, the nameplate capacity of the facility is 80 megawatts. Also, I understand that PSC 004 was a red line of the corrected PPA that we submitted with our initial pre-hearing documentation, and I understand that in order to get to this document, you accepted all the changes we had made in that corrected version. And so while that may be reflective of this document, I'd have to compare the two to see if there are any other areas.
I understand that. No more questions, Mr. Chairman.
Thank you, Mr. Uda. And Mr. Brown, do you have any cross?
No questions, thank you.
Very good. Mr. Bogala, please go ahead with your staff questions.
Thank you, Chairman Koopman. Welcome, Ms. Shermer-Horn. First question, it's your understanding that Caithness is asking the commission to essentially approve the PPA that would govern this project, correct?
That's my understanding.
And what is Northwestern's preferred approach to that issue?
Our preferred approach is that the commission approve the PPA that we submitted with our pre-hearing memo. It's a little difficult to a la carte select provisions between these two and build a contract that actually fits the project. And so that is why we recommend the approval of our submitted PPA.
And you'd prefer that approach over a alternative approach, which would approve, where a commission would issue an order that would essentially establish the material price terms and any conditions we felt were relevant, and then direct the parties to come together on a PPA that materially matches the commission's order?
We would be amenable to the other version you suggest. That is what was done in the Bears docket. I was there for the Bears docket, and the only difficulty with that is that any direction the commission provided would have to be very clear for us. So either would be acceptable.
And so you're saying you prefer approval of a PPA because there's too much in dispute for a commission order to adequately detail those concerns?
That is correct.
You noted that you haven't spent much time reviewing the revised PPA that Caithness submitted last week, correct?
That's correct.
Neither have I. So it's safe to say that the PPA provisions in the table listed on page 15 of your rebuttal testimony
Continue.
would it be fair to say that this table on page 15 through 16 is now dated?
That is correct. Based on what was submitted in PSC 004, I think they've changed some of these provisions, but again, subject to check because I haven't spent much time with it.
And I'll just represent to you that the commission would, in order for the commission to approve a PPA, that will need post-hearing briefing on what the material terms and conditions in conflict are.
Okay.
So that we can at least have what's in front of us to make a decision on whether to approve a PPA or issue an order directing you guys to negotiate and create a PPA.
Thank you.
And this table is very helpful, so it something similar to this would help inform that decision. I want to switch subjects to assignability
Yes.
briefly. It's your understanding that Caithness is requesting removal of the assignability term so that they can have the ability to assign their interest in the contract at will?
I don't know what their intent behind their provisions might be, but I will tell you that the assignability provisions in our PPA are generally consistent with other large QF wind PPAs. We, Northwestern, needs to have some degree of comfort that the party who will take assignment of that contract is creditworthy and competent to operate it. We don't, withhold assignments for, just because we feel like it. These projects change hands frequently, and we need repeatable and consistent parameters to help us make that transition.
And the language that you're recommending for assignability, that's, and I understand you weren't here for many of the previous QF PPAs, but is your understanding that the assignability term Northwestern is proposing is consistent with prior QF PPAs in Montana?
It is generally consistent. We have in the past negotiated some changes to it, but we don't, as a rule, take away our ability to review the party.
And to your knowledge, have QF PPAs been assigned to subsequent interest holders in Montana?
Yes, I, again, will state that I've been here for 4 months. In the 4 months I've been here, I've worked on 3 assignments or consents. And in speaking with folks at Northwestern, just to familiarize myself with the issue, most QFs, especially large QFs, are assigned between the time the PPA is executed, constructed, and comes into commercial operation. So it's not an uncommon thing.
And it's fair to say that none of those assignments require a pre-authorization by the commission. That is a transaction that's outside, or not outside, that has typically occurred without commission involvement.
If that assignment is being proposed by the counterparty, that is correct. I understand that Northwestern would have to seek commission approval if it were to assign its rights and interest in the contract.
Good distinction, thank you. A similar discussion within the topic of assignability. You note on page 19 of your testimony that Caithness has proposed security in the amount of $2.46 million, and you think that is wanting. And you state above that Northwestern typically requires the QF to post a total of $3.2 million per contract for an 80 megawatt project. Was it your testimony that $3.2 million per contract would be sufficient?
That's correct. I have a discovery response that's not in front of me at the moment, but we did a comparison about, it might be in front of me, but give me just a second. We basically looked at the last 5 PPAs that were executed to create a basis of comparison, and the 80 megawatt projects did carry $3.2 million in security throughout the term of the agreement after the project achieves commercial operation. And that is CBC 96. You'll see some of the smaller QFs have a greater requirement, but the similar projects that are 80 megawatts are $40,000 per megawatt.
And it strikes me, wouldn't the security be less in this case because Caithness would be providing it since it's a hybrid project?
As I was discussing with Mr. Uda, I am not entirely clear what the nameplate of the projects should be. And so I think we would be amenable to reflecting the nameplate capacity, but again, the purpose of the security is to protect Northwestern customers. So if indeed it is an 80 megawatt project, then...
This is you might not have insight into this. Do you have any sense of what the financing costs are for this bond?
I do not know.
Thank you, Ms. Schermerhorn. No further questions.
Thank you.
Commissioner Koopman.
Thank you, Mr. Regala, and I think we'll begin today with Chairman Johnson. Chairman Johnson, you have any questions?
Thank you, Mr. Chairman. Ms. Schermerhorn, welcome. Nice to see you. Just have one question, following up on some discussion yesterday with regard to proposed pricing by CBC for their 15 and their 25-year PPAs. The 15-year suggested at 61 and change, and the 25 at 68. I believe it was Dr. Doris who characterized that as, I think he said, counterintuitive, which was kind of my reaction when I looked at the numbers. Based on your experience in the industry, can you share some thoughts with us with regard to the correlation between length of PPA and pricing, everything else equal?
Again, I've been with Northwestern for 4 months, but I've spent the last 11 years in the gas industry negotiating transportation contracts and purchase contracts. And I can definitely tell you, as the duration of the contract increases, the rate and the notional value of the contract typically decreases. So it runs contrary to my experience as well.
All right, thank you very much. No more questions, Mr. Chairman. Thank you.
Vice Chairman Lake, questions, please.
Thank you, Mr. Chairman. Good morning. Just a couple of questions. In your discussion with Mr. Uda on the contracts that are on the index agreement, the mid-C or whatever they're using on that, do you know the average length, or not the average, but the length of term of those contracts? Were they extended contracts, or were they very short-term contracts?
As I was discussing with Mr. Uda, those index-based rates are often, they occur after the expiration of a primary term of a longer contract, so they're shorter in length, and they, as he reflected, the project is already constructed.
Okay, I apologize for missing that, because that is a key term. Now, on the assignability clause, that includes the line of credit that's available for the event that CBC could not meet their obligations. If that is assigned, does Northwestern have a concern about that clause, whether or not that guarantee, if you will, would continue?
The guarantee of default security through the term of the agreement stays with the agreement, no matter who takes it on. There could be a concern about the creditworthiness of a party that takes it on, but Northwestern would have to be able to make the determination that they could carry that default security. And the default security is $3.2 million. That's way less than the annual amount of energy that's delivered under the contract. And so it's not an overly onerous amount of money. It's commercially reasonable to help protect the ratepayers.
Which that just brings up my next question. Is that access to the line of credit in addition to the security agreement?
If I understand your question correctly, the default security provision in the contract allows them to post that security in, I believe, 3 ways. One is a letter of credit, one is cash. The final is a corporate guarantee, but the corporate guarantee is only permissible after the project achieves commercial operation.
Okay, just so I understand, that the line of credit that Northwestern can call on in case of an under delivery, and we'd had that testimony yesterday, is that included in the security agreement, that $3.2 million security agreement, or is it standalone on its own?
The CBC proposal has a capacity security payment that is separate and distinct from the default security under the power purchase agreement. So you are correct that those are 2 separate things.
Thank you.
Yes.
Appreciate you clearing that up. Thank you, Mr. Chairman.
Commissioner Pinocci, your turn.
Thank you, Mr. Chairman. Okay, the PPA you currently have for Caithness is 80 megawatt, is that correct, nameplate?
That's
And so
correct.
it seems pretty important they need to get that updated to 60. Who are you waiting for to get that to you? Are you waiting on Caithness to get you updated? Where does that come from?
The most recent version that we have was submitted by Caithness last week, and I would have expected that to reflect the appropriate size. And they've not issued any new versions of that PPA, and so that's where I understand it stands.
So the new PPA you got still says 80
That's correct.
nameplate?
Yes.
Thank you, no more question.
Good morning, Ms. Schermerhorn. Say that 10 times fast, Schermerhorn.
It's my husband's fault.
Yeah, that's what I figured. Always blame it on the husband, right? Well, thank you for being here. I'm actually somewhat impressed that this is your first time in front of a commission of this type. You've done a great job, and I also have found your, pardon me, your written testimony to be very well expressed and well written.
Thank you.
I'm going to go through parts of it here. I don't have too many questions, but I do have a few that hopefully are relevant. On page, I think this is my first question. Pardon me, I'm talking to myself here. On page, page 8, at the top, you refer to, well, I'll just read the sentence. Since QFs with battery plus intermittent resources are fairly new to the supply landscape and the market is no doubt changing, it would take foresight that none of us possess to determine how these novel PPAs will age over time. What do you mean by age? What are you referring to there?
So we have 44 QFs in our roster of contracts, and some of those have a duration of 35 years. And if you look at the rate that was assessed to those 35-year contracts, it's well over market. In some instances, it's over $100 a megawatt, which is quite a lot. And I think those decisions, again, were made 30-odd years ago under different assumptions. And that's what I was intending to reflect.
So, and this may be drawing upon some of your observation from Colorado, where you've worked before. But have you seen any example of where a PPA is, for a QF, is structured in such a way that it both protects the ratepayer, the utility, and the ratepayer, and the QF developer by having periodic adjustments in the contract based on adjusting forecasts, market price forecasts, and so forth. Essentially, the calculation of avoided cost that at some point, as it's aging, becomes perhaps very inaccurate. Have you seen that, and do you think it's possible to build in the contract? I know we don't have that before us here, but particularly from your perspective as an attorney, well, whatever.
I will give.
What are your thoughts?
I'll give you my perspective in that Colorado does not have many QFs, but the concept of contract reopeners to readjust price in the gas industry, at least, is common. It's not atypical, but that's really the scope of my expertise. I can't speak about how that's done for QFs.
Okay, yeah, I'd love to see that kind of a proposal come before us in the future, but I realize it's not part of what we're looking at right now, so I won't pursue that at this point. I can't guarantee I won't bring it up again. But on page 9, pardon me, you mentioned that at the top that the commission decision 2015, of course we know what decision we're talking about there, which was germane in the days of the Clean Power Plan, when many in the industry saw carbon taxes or fees as on the imminent horizon. And then you make a wonderful line here, the proverbial winds have shifted. I guess my question would be, at this point, does Northwestern and do you perceive carbon, CO2 tax, CO2 penalty as inevitable, as it's just a matter of when? And if that's the case, then should there be a provision in the contract that if it does not include the carbon penalty now, would be able to plug it in later?
I think this reflects back on the earlier statement. We don't know. It's speculative to assume a carbon tax will occur in the future. And so that's why I've made the recommendation to not include a carbon adder in this PPA. We don't know what's going to happen in 10 years. I think the 2019 plan models a potential scenario that includes carbon, but that is not our base scenario. That is just an avenue that was explored. And I don't think that exploration means that Northwestern believes a carbon adder is on the horizon.
Okay, pardon me. Fair enough. So in other words, and this has been the position of this commissioner and of the commission, that at this point we simply are not allowing, haven't up till now allowed to put a carbon adder in to these QF contracts in recent times. But so you would agree at this point that it should just be ignored altogether rather than having a provision that allows it to be included in when it happens?
Mr. Chairman, just to clarify, so the question doesn't misstate the record, it's the MCC's position that by using RECs, we're not ignoring the carbon issue, but...
That was going to be my next
Okay,
question.
apologize. Thank you.
You're tracking with me.
Again, if we write a contract for a duration of 15 years, soon, we wouldn't include carbon, and it would be up to the commission if there was any reopener on that contract. I don't think that's our preferred position, again, because we think carbon is a speculative risk for our customers.
Well, and my next question was going to be, do you feel that it's properly, that the developer is properly protected and potentially remunerated by the fact that they would retain the environmental assets, the RECs, so that if it does become a factor later, then they would be compensated?
Yes, I agree with you.
They can obviously trade it. What about the argument that that even though Montana may not have a a carbon tax or a carbon penalty in place and may never, that, and even if the federal government perhaps doesn't, that the policies in other states in the region, Washington, Oregon, and so forth, affect the market price that the Northwestern needs to pay when they buy off the market, and so that does need to be considered in the PPA in the avoided cost.
I don't think that it needs to be considered in the avoided cost. If those changes occur and are reflected in the future market, that's one thing, and that's one scenario. But we do not perceive carbon in the price at Mid-C right now from the discussions we've had.
You feel like at this point it is not reflected in Mid-C?
Correct.
Okay. And again, who knows what the future will bring? With regard to the inevitability or lack of inevitability of carbon penalties in the future, and your mentioning of the proverbial winds having shifted, you think it's possible that this is a loaded question, I'm telling you right now, that the whole scientific conclusion about climate change may be a shifting wind as well?
That is beyond my scope of expertise.
Okay. I'm sorry, I just had to get that out. Moving on to contract length, Ms. Schermerhorn, I'm looking at page 11 of your testimony. And you state, you quote from the NREL report that all else being equal, a project that has guaranteed price for its energy over its entire lifetime has less uncertainty and therefore less perceived risk compared to a project with some market price exposure. And I guess this is a kind of an economic question, but and perhaps coming back to an earlier question a bit, but with greater risk, is there not also greater reward? In other words, a contract that reflects the real world at any point in time, where that market is, it also makes available long-term to the QF considerably more potential reward than simply a levelized contract over time.
Well, I think that could be true. I think PURPA doesn't allow us to do that, and PURPA dictates that we select the appropriate avoided cost for energy and the appropriate avoided cost for capacity, which fixes the return for whomever owns the contract over the life of the contract, and is reflective of those factors when the avoided cost is calculated.
So the contract reopeners, as you mentioned, you believe are prohibited by PURPA?
That I do not know. That is outside of my area of expertise.
Okay. Yeah, it seems like when you talk about risk, there's also the risk of losing significant profit of the opportunity for profit in exchange for, on the part of the QF developers, a more of a guaranteed return. You mentioned on page 13 you're discussing contract terms, and I am going to avoid going through the chart here. It marks some things, but because there are changes to it on page 15 and 16 based on data request PSC 004, I'm not going to get into that now, but you use the term, and I'm looking at, for example, line 15, wind plus battery PPAs are novel among QF PURPA must take resources. These CBC projects may be the first in the nation. So you have chosen also in your testimony to use the term wind plus battery rather than to use the term hybrid, which is preferred and has been explained at some length by the CBC witnesses as the more appropriate term. Do you object to the term hybrid? What are your thoughts on using that term versus the term that you've used in your testimony and others at Northwestern has used? You see a distinction?
I see wind plus battery as a more specific description of what it is, but they are the developer, and so they get to craft the story.
Well put. Yeah, and if you talk about it here also, wind turbines and batteries on page 18, and yeah, I think CBC in part argues that the batteries produce no additional energy, they merely store it, and should the storage be reflected in the nameplate? I think that's at least part of the issue here, but you're right, they get to call themselves whatever they'd like, and the commission can determine from there. I have no further questions at this time, but thank you for responding to my questions, my sometimes loaded questions, and I apologize for that. Any other questions before we move on from commissioners or staff? And then we would ask for recross.
Thank you.
Ms. Schermerhorn, do you have the latest version of the PPA in front of you?
Which version?
The version that we submitted as an update to PSC 04.
Yes.
Okay. In the recital section on page 1, do you agree that it says, whereas seller intends to construct, own, maintain and operate a 60 megawatt wind electric generation facility integrated with up to 40 megawatt hours of battery storage?
Yes, I read that. We do not value capacity in terms of nameplate, in terms of megawatt hours in this agreement, and so I would suggest a change to that, but that's here nor there.
But isn't that a signal that this is really a 60 megawatt wind facility that has the capability to, because as I think Commissioner Koopman just pointed out, the battery is not a prime mover. The battery can't, without the wind farm, discharge anything. Isn't it really just a 60 megawatt wind farm with a 20 megawatt battery that's used to be charged and then delivered at certain hours to the northwestern system?
Again, I think this is kind of our battle of PPAs here, because the version that we submitted does not have that distinction in it. It does not, in the recitals, mention the nameplate at all. And so it, again, is a matter of interpretation.
Right, and I think I just have one other question for you. You mentioned QF contracts with 35-year terms. To your knowledge, in the last 30 years, has the commission approved a QF contract that had a 35-year term?
Obviously, that predates my time here. However, those long-term contracts that are a term greater than even 15 years are vestiges of the past.
Okay, and do you know whether those 35-year contracts there's 3 of them?
Again, I would need my records in front of me to confirm that.
So you wouldn't know, for example, if those are the Yelp and Broadwater Dam projects?
Again, there were other projects of extended duration beyond just those QFs.
Do you know, because you said these haven't, I think you implied these hadn't aged well, do you recall that?
That's correct.
Okay. Do you know what methodology the commission used in the 1980s to establish avoided cost?
That was well before my time.
Okay. I think we've plumbed the depths of this particular subject. No more questions. Thank you, Mr. Chairman.
Mr. Brown, any questions from you?
I would like to follow up on one of your lines, Mr. Chairman.
Sue?
Do you recall a question from Chairman Koopman about whether there's a CO2 adder reflected at mid-sea?
Yes,
And it's your answer was that there's not currently any CO2 adder at mid-sea?
that's correct.
Are the state policies in California and Washington and other states like that, are those states' goals and policies related to carbon emissions reflected in current mid-sea prices in any way?
That I'm not certain. But I would tend to say no. If we don't see carbon reflected at mid-sea, then isn't that reflective that those current policies aren't showing up there?
How would we see carbon reflected at mid-sea?
Interesting. I'm not sure.
So when you were talking about a carbon adder with the chairman, how would you define that?
The carbon adder that was suggested by CBC is in addition to the avoided cost of energy and avoided cost of capacity. In their proposal, they used our Navigant study that we used in our 2019 plan. So it is basically additional icing on the cake above and beyond the avoided costs of capacity and energy.
Okay, thank you. No further question.
Thank you, Mr. Brown. And redirect Ms. Hill.
Thank you, Mr. Chairman. Ms. Schermerhorn, could you turn to the recitals section of the PPA that is in response to PSC 04 that CBC provided?
Yes.
I think it's the 5th page. When it recites 60 megawatts of wind and 40 megawatt hours of battery, is that correct?
That's correct.
Did Mr. Grant testify about 55 megawatt hours of battery?
I heard 55 megawatt hours and again am confused about what the nameplate of this facility is.
I have no further questions.
Thank you, Ms. Hill. And at this point, Ms. Schermerhorn, you are temporarily excused.
Thank you.
Thank you. Ms. Hill, you may call your next witness.
Northwestern calls Michael Babineau.
Mr. Babineau, do you need to be sworn in?
I do.
Raise your right hand. Do you swear that the testimony you are about to give is the truth and nothing but the truth, so help you God?
I do.
Good morning, Mr. Babineau.
Good morning.
Babineau. Could you please state your name and business address for the record?
My name is Michael Babineau, Babineaux. My business address is 11 East Park Street, Butte, Montana.
By whom are you employed?
Northwestern Energy.
What is your title with Northwestern?
I'm a senior analyst with the Energy Supply Planning Department.
You have a document before you marked as NWE Exhibit 9. Could you tell me what that exhibit is?
This appears to be a copy of my pre-filed intervenor testimony.
Do you have any corrections to that testimony?
I do not.
Could you state at a high level the main topics that your testimony covers?
I discuss some of the inputs to the PowerSim model. I discuss our monthly avoided cost of energy calculation and a capacity contribution using the SPP method.
Mr. Chairman, Northwestern moves to have Mr. Babineau's testimony admitted into the record as NWE Exhibit 9.
Any objections? Seeing no objections, NWE 9 is admitted into the record. And by the way, I as a just a parenthetical observation here, I do like, Ms. Hill, what you're doing, asking each witness to give a very brief 5,000-foot summary of what they cover in their testimony. I think that's helpful to the commission.
Thank you, Mr. Chairman. I tender this witness for cross-examination.
Mr. Uda, do you have cross?
I do, Mr. Chairman. Mr. Babineau, could you please turn to page MSB, page 6 of your testimony, line 8?
I'm there.
Okay. Do you state on that page, those lines, that the reason for changing your approach to forward market price estimates was, quote, due to the seasonal extremes of forward market prices?
That's correct.
Okay, so if the commission wanted to review an exhibit or a document in the record in this proceeding that demonstrated the seasonal extremes, where would they find such a document?
I do not know.
Is there such to your knowledge?
I can't recall if there is.
And I gather from your response that you just don't know whether it would be or it wouldn't be?
If there is a docket in this, if there is a document in this docket, I don't recall if there's one that exhibits the seasonality.
Have you yourself prepared such an analysis of the seasonal extremes in forward market prices?
I have not specifically, no.
Can you please return to Northwestern's response to CBC 084, and specifically, I'm looking at Northwestern's response to D. I'll give you a minute to review it, Mr. Babineau.
Okay.
And do you agree with me that the question posed was, is there any evidence for seasonality in these forwards? That is, that the forwards for a date 2 years in the future are higher or lower in particular seasons or quarters? Do you see that question?
I do.
And do you agree that the response was, very little?
I do.
Okay. Is it the case that in prior dockets, you used the ICE mid-C price? I can't remember if it's for 3 years or for 2 years. Can you refresh my recollection?
Which dockets are you referring to?
Well, I'm starting, for example, with the Gray Cliff proceeding back in 2016, the Crazy Mountain proceeding in 2017, the QF1 in 2017, Montana Sun in 2018, and the last CBC docket.
I was not involved in some of those dockets in any way, and on some of those dockets, I was just not involved in the forward curve creation. So I'm not aware of how far out the strips went.
Do you agree with me, and I'm going to request administrative notice of this, that in the Montana Sun case, the commission stated your avoided energy cost methodology as follows in terms of the market price forecast used therein. Northwestern uses Intercontinental Exchange forward market prices at the Mid-Columbia Mid-C trading point obtained on March 2017 for the period from March 2017 through December of 2020. Subject to check, do you agree with that?
I wouldn't know.
Okay. Do you recall, were you involved in the last CBC proceeding?
I was.
Okay. Would you agree with me, and again, I'll ask the commission to take administrative notice of this. Dr. Doris, this is quoting in the pre-filed, specifically stated that Northwestern applies a well-accepted practice in Montana of applying the market forward curve price for ACO from the Intercontinental Exchange over the liquid portion of the curve through 2021, and then escalating the forward curves by EIA's escalation rate through the remainder of the forecast period. Is that consistent with your understanding of what was done in that case?
I believe so, yes.
Okay. And I could use other examples, but you're not using that same approach in this case, is that correct?
I would not say that that is not correct. We are using the same approach to determine a liquidity point as we have used in the past. Using that same method, applying different data, you get a different result. And that's what we're seeing in the difference between the liquidity point in this docket and the previous Caithness docket.
Well, we'll get to liquidity in a minute, but would you agree in those prior two cases, it was 2 years roughly that you were using the forwards from the mid-C ICE index?
I recall that in the previous Caithness docket, we used the strip, I think, out through 2021.
So that would be roughly 2 years,
I can't recall the beginning of that strip, but yes.
something like that.
Subject to check.
Okay, sure. And you can agree or disagree with this, but I found a definition of liquidity, and I wanted to get your opinion about it.
Okay.
Okay. Liquidity can be defined as the degree to which a product, such as electricity or gas, can be quickly bought or sold without affecting its price and without incurring significant transaction costs. Are we good so far?
I suppose.
Okay. A high degree of liquidity, therefore, is the best evidence of strength in any market. Would you agree with that statement?
I don't think I'm qualified to
Okay.
offer an opinion on that.
Okay. In turn, a good level of liquidity will mean that commodity prices better reflect changes in supply and demand fundamentals. Do you agree with that statement?
I think that's out of my realm of expertise.
Okay. So when you're talking about liquidity, was this based on your understanding of what entails a liquid market, or is it based on someone else's understanding of what constitutes a liquid market?
It's based on Northwestern's current policy and making that determination.
Okay. And aren't you, in fact, at this point, taking the first quarter and the fourth quarter of every year and averaging those forward market prices?
No, that's not correct.
Well, why don't you explain to me what you're doing now?
So since the beginning of 2019, Northwestern updates its forward curves quarterly. And in each of those updates, it pulls 15 trading days from the current and previous quarter, the first 15 trading days, for ICE prices, and it pulls a mid-C futures trading report on the 15th day of the current and previous quarter. We look at off-peak and on-peak periods, and we look at open interest and trading volumes. And as soon as any of those, as soon as for either the on-peak or off-peak periods, the open interest and trading volume go to 0 megawatts, then we deem the market to be illiquid.
Okay. So, so you take the last quarter, which would have ended when?
For
this particular.
For this docket, we looked at, this was a third quarter update, so we looked at the first 15 trading days of July and April.
Okay. And then you took the one from this quarter, correct? You took 15 trading days from this quarter?
This is now the fourth quarter.
Right.
We did not take, for this docket, we did not run an avoided cost using a forward curve that used fourth quarter information of
So you
2019.
just used July and April?
Correct.
Okay. And then what did you do with those two forwards?
So we have a total of 30, we took, for natural gas prices, we took the strip out, the average of those strips out as far as they would go, so that we had 30 points. As soon as some of the dates started falling off, we stopped using the strip, and we applied EIA escalation.
Okay. No, what I'm asking you is you picked in the forwards 15 days from each one, right?
Yes.
Okay. So then what did you do with the 15 days that you got from each one?
We averaged all 30 of those points together.
That was the point I was trying to get at earlier. So instead of just using the forward price curve now, you're averaging it with what happened in the last quarter. Is that correct?
Yes.
Okay. And did I understand you to say that with respect to liquidity, that you claim a market is liquid up until the point there's 0 transactions?
Or open interest.
Okay. So is it the case that when you're looking at any particular market, if there's one transaction on the market in what's normally a robust market, that counts as liquidity from your standpoint?
I'm sorry, can you repeat the question?
So I think you can agree when you look at the interest at the Mid-Sea Ice Exchange, it's very high at the very beginning of the term and then starts to fall off over time, correct?
Correct.
Okay. So within that market, is it your understanding that you treat that as being liquid now as long as there's any transactions or open interest?
We treat it as being liquid until both trade volume and open interest decline to 0.
Okay. So is there any distinction between a liquid market and a thin market?
I wouldn't know.
Okay. Do you have an opinion about whether or not this commission should rely on a market that has one transaction 7 years out?
I wouldn't know.
Okay. And you're now claiming that the ICE market is liquid through 2026 or 7 years?
Is liquid through 2025?
Okay. So 6 years from now. Is that correct?
Correct.
Okay. And is that consistent with your understanding of the way that Northwestern viewed liquidity in prior dockets?
Yes, that's based on applying the same methodology.
Okay, but we just talked about the fact before you were using 2 years and then assumed illiquidity and then started escalating. That was what was in the commission order I read you and in Dr. Doris's testimony. So I'm asking you again, is this different than what you were doing before?
No, it's not.
Okay, and explain that. Why isn't it different?
As I was saying earlier, in the previous Caithness testimony and in other dockets, we use the same methodology of looking at liquidity points in terms of looking at mid-C futures trading for on-peak and off-peak for open interest and trading volumes. We're using that same methodology here that we did in previous dockets, including the previous CBC docket.
Okay, but if I were to show you a chart from 8 months ago that showed the exact same pattern, then what had changed was not your view of the liquidity of the market, but in fact, your approach to determining liquidity, correct?
I'm not sure I understand your question.
So we have these plots. My witnesses have done them. I'm assuming you guys have done them. That shows transactions at mid-C, okay? And I think we've talked about, like, in the first couple of years, there's a lot of interest, a lot of trades, et cetera, and then it falls off over time, okay? So if we were to show you that same chart from 8 months ago and it showed the same pattern, it would indicate not that you guys were looking at liquidity the same way, but that you had changed your view of what liquidity means.
Without seeing the plots, I'm not exactly sure what you're referencing. I suspect that if you applied our methodology to the forward curve information and ICE futures trading that we used in the first CBC docket and this one, you would find that using the same method, we get different results.
Okay. On page MSB 8 of your direct testimony, lines 10 through 15, you describe how you modeled the CBC wind energy production. Is that correct?
Which line was that, did you say?
Lines 10 through 15.
Okay, I'm there.
Okay. And based on this description, can you confirm that you did not model the impact of the battery storage features of the CBC projects in developing your avoided energy costs?
I can confirm that.
Okay. What is your understanding of the purpose to which CBC will be using the batteries?
Multiple purposes. I couldn't go into detail on all of them.
Isn't one of those purposes to shift the generation from the wind farm from low load hours to high load hours?
I have heard this, yes.
Okay. And wouldn't it be the case that generation delivered to Northwestern during high load hours, all else being equal, would typically be of higher value to Northwestern and its customers?
I agree with that.
If that's true, again, all other things being equal, isn't it the case that not modeling the battery would result in at least an understatement of the energy avoided cost?
Depends on what you're including in all things being equal.
I'm just saying, if you just assume that in general, providing power in the high load hours provides a greater value to Northwestern's customers and therefore projects are paid more for it, if that's generally the case, then not modeling that shift would produce an overall lower avoided energy cost.
I am not convinced that it would produce an overall lower avoided energy cost. I would add that adding more, providing energy more often in heavy load hours would probably increase the capacity, avoided cost of capacity payment.
But why wouldn't, if you're delivering power, when you're modeling the avoided energy cost, you have 8,760 hours a year. If you're just assuming that it's generating all the time, you would agree that in those low load hours, the projects would get paid less than they would if they were delivering in the high load hours. So I guess I'm not understanding your answer.
I have not gone through the math and determined if that's true, that it would not reduce or produce an offset in the amount paid for low load hours.
Okay. But you would agree with me that over that course of that 8,760 hours, there is the same thing that goes on for utilities or for anybody else. You know, there's revenue being earned during the course of the year, right?
Yes,
Okay, and there are more low load hours than high load hours, correct?
yes,
Okay, so if you're assuming that the generation is delivering in low load hours and not high load hours, doesn't that have at least some effect on the avoided cost of energy?
it would.
So let me ask you this question. Why didn't you just model the batteries?
Northwestern did not model the batteries because we were not comfortable with the inconsistencies we were seeing in the data provided by Caithness. And they did not give us adequate information so that we felt comfortable and that we could accurately model the battery.
Okay, and you testified in docket D 2018 8.2, the first CBC docket, is that correct?
Yes,
Okay. Are you aware that Northwestern modeled the output of the batteries and the avoided cost estimates it produced in that proceeding?
I am.
And is it your understanding that Northwestern Just a second, Mr. Chairman, people are, with your indulgence, Mr. Bobineau. Can you turn to your table on page MSB 11, please?
I'm there.
Did you calculate the avoided energy cost using the commission's prior order on valuing condition 3 at market?
Yes,
Okay. So you didn't calculate it with condition 3 at 0?
that's correct.
Okay. I don't know. Anyway, I want to get back to the batteries for a second. Is it your testimony that Northwestern couldn't model the CBC batteries because the SPP methodology does not provide guidance on how to calculate the capacity contribution of a battery?
Are you referring to modeling for an avoided cost or modeling for a capacity contribution?
Capacity contribution.
Can you repeat the question, please?
Sure. Is the reason Northwestern could not model the CBC batteries is because the SPP methodology does not provide guidance on how to calculate the capacity contribution of batteries?
That's correct.
Okay. Is it your understanding that the batteries, apart from the wind project, are going to be discharging separately?
Defined separately.
I mean, in other words, the wind project operates, you got those batteries over here, and the batteries are somehow going to be discharging to the system separate and apart from the wind generation.
My understanding is that the battery's state of charge would be dependent on how the wind is generating in hours prior to that hour.
So the wind, because the batteries themselves can't discharge anything without being charged first. They have to be charged by something, correct?
Correct.
Okay. And in this case, do you understand that CBC's proposal is to use the wind to charge the batteries?
Yes.
Okay. So isn't really what CBC was doing was saying, we're going to defer wind from the low load hours, put it in the high load hours, and you don't need any addition or amendment to the SPP methodology to measure wind in all hours, do you?
I'm not sure I understand your question.
Well, I'm not sure I understand it either, but I'll take another run at it. Okay, so this is my question. So my question is if really what's going on is the power, at least what CBC says, is the power is going to be shifted from the low load hours to the high load hours. That's just deferred wind generation, right?
I suppose.
Okay. And does the CBC methodology tell you how to measure the output from wind facilities?
The CBC methodology?
I mean, sorry. I misspoke. I will rephrase. Does the SPP methodology tell you how to measure capacity contribution from a wind project?
Correct.
Okay. So one last question. So I think we talked about previously that you did model the battery in the prior CBC docket. So is it really the case that you couldn't model it, or Northwestern chose not to?
We did not feel comfortable with the inadequacies that we saw. I think Ben Fitch-Fleshman, his testimony discussed this more in detail. So we didn't feel that we could model the batteries appropriately for our customers.
Okay. I think I've plumbed the depths of this subject quite enough. Thank you, Mr. Chairman. No more questions.
You're welcome. Thank you, Mr. Uda. And Mr. Brown, any more questions?
Just one, Mr. Chairman. Mr. Babineau, are there really more light load hours than heavy load hours?
Actually, I think that's incorrect if I said that. There are more heavy load hours than light load hours.
Thank you.
It's getting on to 10:30, so I think what we'll do, Ms. Hill, is we'll let you do redirect, and then we'll have a break after that. That's right. Excuse me. I'm out of order here. I'm thinking that maybe we ought to take a break right now, and then we can continue with commissioner questions and staff questions. I think I need a break. So we are off the record for the next 15 minutes. Okay, we are back on the record, and it is time for staff questions from Mr. Regala.
Thank you. Chairman Koopman, welcome, Mr. Babineau.
Thank you.
I think I just have two lines of questioning. Follow up both from Mr. Uda's questioning. First deals with mid-sea future trading. Do you know what sort of barriers to entry there are to be able to participate in the forward mid-sea market?
I don't know.
Do you have any idea what it would take for Northwestern to bid into that forward market?
I don't know.
Does Northwestern bid into that market at all?
I'm not aware if we do.
Okay, then switching to battery modeling. So I didn't realize that Northwestern modeled batteries in Caithness 1. In your response to Mr. Uda's questioning was that you just weren't comfortable with what was presented in Caithness 2 to model them. And can you provide further detail why you weren't comfortable with it? We've had this discussion with Dr. Fitch-Fleischman, but I think it's more important now. I just didn't realize that, or it's not important, it's more interesting to me now that you modeled them in Caithness 1, but not in Caithness 2.
There were several projects presented prior to the Caithness 1 docket, several different battery configurations. We attempted different modeling at that point. That was the first time I think a battery had been brought to us from a QF. But in this case, we were looking for, I think more specifically, an algorithm to tell us when the battery would dispatch. And one of the things that we noticed was that the algorithm information that we received from Caithness produced results that were inconsistent with what Caithness claimed the battery would do based on the data that Caithness supplied. So that presented, I think, a primary concern.
Was that different in kind from what they presented to you in Caithness 1?
There are lots of differences, I think, in terms of what was presented in Caithness 1.
And Dr. Fitch-Fleischman testified yesterday that he felt the differences would have been trivial, so that further supported not modeling the batteries. Would you agree that the difference in avoided energy costs, if you had modeled batteries, would have been trivial?
This idea that the battery would shift energy from light load to heavy load periods might produce an increase in one and a decrease in the other, and I'm not sure at this point what the net effect of that would be.
Thank you, Mr. Babineau. Chairman Koopman, no further questions.
Thank you, sir. And Commissioner Pinocci, you're next up.
Thank you, Mr. Chairman. So Dr. Doris says, Randy, to know if I need a bigger battery or if the battery is sufficient, I need this sub-hourly report. If you had that, could you have modeled this battery?
I think if we were supplied with an algorithm that could model battery dispatch at a sub-hourly level, and the results of applying that algorithm to the data that Caithness supplied us were consistent with their claims, we would have had a lot more comfort and probably might have gone forward subject to any other issues that we saw.
And I think you were not present yesterday, is that right, to hear?
I was not.
Okay. You know, I had asked him, do we need a bigger battery? And he really said this sub-hourly report would answer that question. So I wanted to see if that would help you out as well. And it sounds like it might. All right. No more questions. Thank you, Mr. Chairman.
Chairman Johnson, questions?
Thank you, Mr. Chairman. I don't have any questions for this witness.
Vice Chairman Lake, questions?
Thank you, Mr. Chairman. Just a couple of them. First, will grizzly and black bear be in the resource stack that Northwestern uses?
Grizzly and black bear are currently considered to be part of our resource portfolio.
Okay. I asked that question for the attorney, and now we're getting into the second level, and I'm going to give the rest of my time to Mr. Rogala. But the one question that I had, when you're doing the calculations as to the value of the Caithness production, is it possible at all to anticipate the actual battery discharge times? Since the system, as they've stated several times, are designed to hold the power and discharge at an opportune time to gain the most value. My mind just does not want to understand how you can calculate what their actual value is going to be when you have no idea when that discharge is going to occur.
I would agree with that.
Okay, can you help me? Is there any way to do it?
I don't know. I guess I'm not familiar enough with battery algorithms, discharge algorithms.
Okay, that's fair enough, and I appreciate that. Thank you.
Thank you, Commissioner Vice Chair Lake. With the opportunity, Chairman Koopman, I'd like to just do one more follow-up question if I can.
Yes, you may.
Mr. Babineau, I apologize for this. Grizzly and black bear were included in your resource stack when modeling avoided energy costs, correct?
Correct.
And can you provide any updates to whether Grizzly and Black Bear are moving forward to be operational with Northwestern?
I can't.
And why?
I don't have that information.
Then what? Then on what grounds should Grizzly and Black Bear Wind be included in Northwestern's resource stack?
Based on our procedure of including QFs that have filed a petition with the commission and received orders that obligate Northwestern Energy to buy their power.
So just on the basis of having received an order, and that's it.
Unless and until the QF withdraws or notifies Northwestern formally that they're not going to go forward.
Okay, that's helpful. Thank you. No further questions.
Thank you, Mr. Regala. Good morning, Mr. Bobineau.
Good morning.
I just have a couple of queries here, I think. Looking at your direct testimony, this is interesting. The chart on page 5 of of your full generation of all your generation assets that were included in the base portfolio here. I don't see anything for nuclear. I do have to wonder sometimes if Northwestern has an interest in pursuing that. Obviously, it would require a change in state law, and but that's usually a piece of cake for Northwestern. So, but yeah, well, no, I won't ask because it's not relevant to this. But I have to ask just a tad bit more, and I apologize for going over this ground again, but it's difficult for me to understand, so I'm giving you another opportunity to maybe explain it in a way that gets through my thick skull. Why it's reasonable, why a reasonable attempt wasn't made to reflect in your avoided cost calculations and apparently in the determination of capacity contribution. The obvious, it seems to me, the obvious positive value of the batteries. And I understand what you said, that maybe there's an offset, heavy load hours versus light load hours and so forth. But at the end of the day, it seems like there's got to be a positive factor there. You can't just not include it. And I understand that you had challenges with the kind of data that was provided this time. The proposal was different than Caithness 1. I understand all that. But doesn't it seem more reasonable to make some good faith attempt to reflect that in your calculations, the batteries?
I think we took reasonable steps to get all the information from Caithness that we would need to model the battery for an avoided cost of energy. I would say that we did include the battery in terms of our capacity avoided costs. And in terms of a capacity contribution using the SPP method, that tool was not prescribed for use with batteries. Mm-hmm. And as I'm aware, SPP is still trying to figure out themselves how to model a battery or represent its capacity contribution.
Yeah, I'm sure that's true. Well, moving on, it's just a little troubling to me, but I understand your challenges, the way you've explained them. Okay, so you mentioned on page 7, where under the heading of or answering the question about forward curves for commodity prices, how are they created? And you mentioned at the bottom of page 7 that Ascend, regarding heat rate, that Ascend developed this implied heat rate in 2018. Northwestern adopted its use for power price forward curve development for its 2019 electricity supply resource procurement plan and QF avoid cost modeling going forward. market heat rates, implied heat rates, really do have a pretty considerable impact on the forward price curves, don't they? Doesn't it? I should say. It's a big factor.
If you're looking at it from the perspective of as with the SIN's power prices, those are derived from a heat rate. If you're looking at it as the heat rate being the input, yes.
Yeah, well, and I realize, well, I'm looking at your chart on page 11 of your testimony. It makes that pretty clear what the difference is with declining, without declining heat rate and with a declining heat rate. You've got a high load or heavy load hours, a difference. Well, you can read it yourself, but there's a major difference. The other thing that I'm and the reason I mention this is because it is troubling to me, or maybe troubling isn't the right word, but challenging to this commissioner, to see such a large gap in the numbers between the petitioner and the intervenant Northwestern, and obviously this is one of those factors is the heat rate question, and it's and then of course the other is that I wanted to bring up here on looking at your chart again is you're calculating the cost of energy, the avoided cost, without the conditions 1, 2, and 3 factored in, and then with conditions 1, 2, and 3 factored in, with a value of 0 for condition 3, long 2, and then again with the condition 3 valued at market, which is what the Public Service Commission has most recently approved. Why is it, and I think I may have asked this to another witness too, but why is it that adding the conditions increases so much the avoided cost? Looking here at, for example, without declining heat rate, you've got a heavy load hour without the conditions of 2378. Then with the condition 3 as 0, 3259, and then with market price for condition 3, 3625. That's a large spread there. But why in particular is are those prices so much higher? Avoided cost so much higher when you add the factor of the conditions, the 3 conditions?
That's a good question, and there's an answer for that. I don't know that I could adequately describe that here today. I mean, it comes down to the cost of serving load, I guess, primarily, versus applying conditions, but I couldn't go into details about that. I'm not prepared to offer a description of that specifically today.
Is that something maybe you could provide to the commission as a late filed exhibit?
Sure, certainly. We'd be happy to.
I would appreciate that. And of course, you are proposing, Northwestern is proposing that long 2, condition 3 be based on market rather than on 0, and yet Northwestern really believes that it should be 0. Is that right? In other words, you believe that 0 is justified, but you're not using 0 here, you're using market. Is that because you simply want to comply with our most recent policy on that?
I believe that's correct, yes.
Okay.
We don't believe if we cannot turn down any resources that there's any cost for us to avoid.
And there's certainly an argument for that, and we've gone around on that in the past, and it's still an interesting issue. I think I'm done with my questions. So at this point, I'll ask if there's any recross from Mr. Uda.
Just a few questions, Mr. Chairman. Mr. Bobineau, can you recount the way in which the battery's performance was different from what Caithness claimed?
It seemed to me, and without myself personally spending a lot of time looking at it, from discussions that there were tolerances that Caithness claimed that would happen, or that the battery would operate within, and applying the algorithm to the data, there were hours, several instances where it did not, the output did not fall within those tolerances.
Did you personally perform those calculations?
I did not.
Okay. And you said based on conversations with whom?
Internal to Northwestern Energy.
Anybody specifically, or do you recall?
I would say probably within our group, and including others, Joe Steinmetz, for example.
Okay. So can you recount the ways in which the last CBC proceeding, the data and algorithms provided to you by the CBC projects was different than it is now?
Objection, isn't that the same question?
No, I'm talking about this time as his testimony was to response to a question from Mr. Regala, was that the batteries didn't perform up to the algorithm's expectations, and I was asking him in what ways in this proceeding it did not. What I'm asking him is, he modeled the battery the last time, and I want to know what the difference was between this time and last time. Do you understand that question, Mr. Bobineau?
I'll defer to your ruling, Mr. Chair.
Yeah, I'll allow that question.
So the question pending essentially, Mr. Bobineau, is last time you modeled the battery, apparently you felt the algorithm was fine?
So to provide a little context, and I think I mentioned this before, several different configurations were supplied by Caithness leading up to the prior docket.
Right.
And what the final order had an avoided cost, that product was not the same as what we had presented in our testimony in that docket.
I'm not.
And they were not modeled the same way.
Oh, I'm sorry. I talked over you. Are you done?
I'm done.
Okay. So, but my question is, you were able to model it prior to the last CBC proceeding, and that's what you testified to, right?
We did perform modeling of the battery in some manner in the last CBC docket.
Okay. And what I'm asking you is, what was the difference between this time and last time?
I can't recall all the differences. Certainly a different configuration and size. The constraints that they presented here were significantly different.
But the projects are smaller this time, correct?
The projects are smaller this time.
And there's less of them.
That is correct.
Was the algorithm sufficient last time? Do you recall?
I don't recall. I know that that was the first time I think I stated that a battery was brought to Northwestern Energy to model with a QF. And we have probably refined our requirements and process to both optimize how PowerSim would model a battery and to be more accurate in the results.
Mr. Bobineau, is it accurate to say that you did not make the decision not to model the battery?
That's accurate.
Okay. And I believe you've testified on cross that you did model the battery, but you didn't use the SPP methodology. Is that correct?
I'm not sure.
For capacity purposes. You did model the battery for capacity purposes, you just didn't use the SPP methodology. Is that correct?
That's correct.
Okay. Do you know whether SPP is attempting to model hybrid projects or standalone batteries?
I would assume they would be interested in either.
Okay, but do you know whether they're modeling hybrid projects?
I do not know.
Okay. The declining heat rate that Chairman, Honorary and Present Chairman Koopman asked you about, the declining heat rate that appears in your testimony, did you develop that or was that provided to you by Dr. Doris?
That was provided by Ascend.
Okay, so it came from Dr. Doris's company.
Yes.
Okay. And I think that's the end. I'm just going to go through my notes real quick. Oh, one last question. Commissioner Pinocci asked you about the bigger battery and the sufficient thing. Would you agree that in this docket, the ratio of the batteries to the wind output is significantly higher than it was in the CBC1 proceeding?
If I recall, the CBC1 had a 40 megawatt battery with the 80 megawatts of wind. I can't recall.
Well, there were four 80 megawatt wind projects, right? And then there was 4 batteries for each of the projects. But the batteries were, I think, 10 megawatts each, 4 hours, for a total of 40 megawatt hours. Does that refresh your recollection?
Sounds
Okay, so you had essentially these 40 megawatts of battery capacity and 320 megawatts of wind in that proceeding, correct? And in this proceeding, you have two 60 megawatt projects and two 20 megawatt batteries, is that right?
correct.
Okay. That's all the questions I have, Mr. Chairman.
Thank you, Mr. Uda. And Mr. Brown, do you have any questions?
I do have one follow-up, 20 years, Mr. Chair, again. Mr. Bobineau, Commissioner Koopman asked you about whether Northwestern believes condition 3 should be 0. Do you recall that?
Yes.
Is it possible that Northwestern might actually incur costs as a result of the QF output during condition 3? Is that possible?
Absolutely.
I'm going to object, Mr. Chairman. That question has no foundation. There's nothing in the record about the relative cost of Barking's power. I specifically went through this issue with the other witnesses from Northwestern, and they have not done that analysis.
Mr. Chairman, I'm not asking about the relative costs. I'm just asking whether there could be possible costs.
And it's asking for speculation, still lacks foundation.
Mr. Chairman, we had extensive testimony yesterday about the need to develop a curtailment stack for exactly this purpose, so there is evidence about this.
And the testimony on that is they haven't done it yet.
Again, Mr. Chairman, I'm asking theoretically whether it's possible, and it goes to this question of whether we should make the effort to develop a curtailment stack.
I'm going to overrule the objection.
Is it possible that Northwestern will actually incur costs? In other words, have a negative price instead of 0 during condition 3?
Yes.
But at this point, in this case, Northwestern continues to propose to use 0 during condition 3 as essentially a proxy because we don't know that, if there is a negative value there. Is that your understanding?
I would say yes, that's my understanding.
And I know I just said some of this, but were you here for any of the testimony about the usefulness of developing a curtailment stack?
I'm not sure that I was listening at that time.
But would you agree that curtailment costs, that there could be costs associated with curtailing resources?
Yes.
Thank you, Mr. Chairman. No further questions.
Ms. Hill, redirect.
I don't have any questions, thank you.
Well, Mr. Bobineau, you are temporarily excused. Thank you for your testimony.
Thank you.
And Ms. Hill, are you done with witnesses, or do you have any additional witnesses?
I'm finished, no further witnesses, thank you.
And do note that we will have a second phase to this hearing, which probably won't take very long, but you will have an opportunity to bring any witnesses forward again if you choose during the rebuttal part of our hearing.
Thank you.
At this point, we'll call upon the Montana Consumer Council to bring forward your witnesses.
Before I call Mr. Stamitson, Mr. Chairman, I'd like to make a brief opening statement.
You certainly may.
And I won't attempt to outline the Consumer Council's positions on all the issues. I'll save that for my brief. Considering how many of these petitions you all have adjudicated over the years, including up to recently this year, I suspect you're aware of most of our positions on at least the recurring issues. I want to just make a few sort of high-level observations about the legal framework as I see it that applies to these proceedings, because you hear a lot from the lawyers who love to debate precedent, and by that I mean prior PSC commission orders and decisions, and what was done previously by parties in other prior contested cases. And you hear a lot about the extent to which that precedent perhaps limits your discretion in this case, according to the lawyers. My message to you would be that both PURPA, the federal law, and state law delegate a great deal of discretion to you to determine the rates and conditions of QF contracts, including this one. And in Montana, we set avoided costs for large QFs on a case-by-case basis through these sometimes cumbersome contested case proceedings. But I would submit that there is good reason to set avoided cost rates for large QFs on a case-by-case basis, and that is that Northwestern is a relatively small electric utility by national standards. And if the goal is to build generation to serve Montana load, and I would say that that should be the focus of this commission, then 80 megawatts is relatively large. And in this case, what we're really talking about is a 120 megawatt project. And that's due to the 1 mile rule under PURPA, making this technically permissible. But my point is that projects that large on a system this small can greatly affect the subsequent avoided costs going forward. And that's partly because the utility might become even longer on energy than it already is. And it might also partly be due to the need for ancillary services. But it's critical for that reason that we get the avoided costs right in each case. Even at 15 years, it's still critical that we get the avoided cost right. We've seen in Montana the cost of getting this wrong with the Kelp and Yelp projects that were just referred to, which got 35-year contracts and which we are still paying for to this day. Because this is the first battery hybrid project that could come online, not the first that was proposed to Northwestern, of course, but the second iteration, if you will, of the first battery project. I think the precedent and prior approved methods may not be as applicable here as they might have been, or as they might be in a different case. The other point that I want to make is that as a matter of law, these really are two-track parallel proceedings. And what I mean by that is there's two sources for your jurisdiction. Both PURPA, the federal law, and state law give you authority to set the rates, to determine the rates and the conditions of the contract between the QF and the electric utility. Under PURPA, I'm paraphrasing, but QFs have the right to come to the state regulatory authority to seek to enforce their PURPA rights. And that includes legally enforceable obligations. Under Montana law, either the QF or the utility can petition you to set prospective avoided cost rates. And the Montana Supreme Court has told us that those prospective avoided cost rates should be based on current avoided cost data. I think the jargon used by the court was current avoided least cost resource data. And that's from the first Whitehall Wind decision at 2010 MT2. So I would perhaps concede to my esteemed colleague, Mr. Uda, that when CBC attempted to create an LEO in this case in April, May, that it had no notice of the Grizzly Wind and Black Butte final orders, which didn't come out until August. So I think it's fair to judge that LEO claim, that track of this proceeding, not only based on all of the prior commission orders and decisions up to that time, but also based on all reasonable current information that was available to CBC, that it should have taken into account when trying to estimate avoided cost at that time. So that's the LEO track. And I would note that the LEO issue usually boils down to whether the QF offered a price term consistent with Northwestern's avoided cost at the time it was offered. That usually resolves that issue, the answer to that question. But for purposes of determining avoided costs prospectively under state law, assuming you find that there was no LEO, then I think it's all fair game. And in fact, that's the whole point of having contested case proceedings, is to put all the parties on notice of the potential issues, to allow parties such as Northwestern to advocate freely for what they think the correct avoided cost is. That Grizzly and Black Bear Wind, the Grizzly and Black Bear Wind have the right to now sell their power to Northwestern under a commission order, that they would be in the portfolio makes sense. In other words, the proceedings here are designed to empower you to tailor your decisions to the facts and the circumstances of each case. So you have discretion to make findings of facts here, based on the evidence, yes, on technical issues such as implied heat rate, hourly modeling. And you can't ignore your precedent, but I guess my comments are designed to make you feel like you're not boxed in by it, that each of these cases is unique. With that, Mr. Chairman, I would call Jamie Stamitson.
Mr. Stamitson, do you need to be sworn in, or have you already been sworn in?
I've already been sworn in.
Very good. Proceed.
Would you please state your full name for the record?
My name is Jamie Stamitson, Jaime Stamatson.
And by whom are you employed?
I'm employed by the Montana Consumer Council.
And what is your job title at the Consumer Council?
My title is economist.
Did you file intervener testimony in this case?
I did.
Placed before you is a document that I've marked as MCC 1. Could you please identify that document?
This is a copy of my intervener testimony filed in this docket.
Does it appear to be a true and correct copy of your intervener testimony?
It does.
Do you have any changes or corrections to make?
I do not.
And if I were to ask you the same questions today under oath, would your answers be the same?
They would.
Mr. Chairman, I'd move for the admission of MCC 1.
Any objections? MCC 1 is admitted into the record.
Mr. Staminson's available for questions.
Let's see, we would begin with Mr. Udom.
I think I just have one. Do you want me to go first?
Either way,
Okay.
that's fine. Ms. Hill, sure.
Thank you, Mr. Chairman. Good morning, Mr. Stamitson.
Good morning, Ms. Hill.
Could you turn to page 8 of your testimony? In the first line of your answer, you say, Ascend used the monthly version of PowerSim. Are you with me?
Yes, I am with you.
Isn't it true that this described monthly version is really an aggregate of the hourly version?
As has been explained in this proceeding, yes, it is.
And isn't it possible that the commission actually started using this monthly version before Northwestern started using, not this, isn't it possible that the commission started using a monthly version before Northwestern started using PowerSim?
The commission used a monthly version before PowerSim.
Is it possible that they calculated a monthly?
Mr. Chairman, I hate to do this, but this is asking the witness to speculate. If there's foundation for the question, I have no problem with it, but just asking him to speculate about what might have been the situation, I think is objectionable.
Ms. Hill, anything?
I can rephrase it.
Yeah, please do. I agree.
Are you aware of if the commission used a monthly calculation before Northwestern used PowerSim?
I think they did in their hybrid peaker methodology prior to the PowerSim usage.
That's all the questions I have.
Mr. Uda, Cross.
Thank you, Mr. Chairman. Mr. Stamitson, do you agree that any modeling approach used in a QF proceeding or any commission proceeding really should be reviewed in an open and transparent process?
I believe that it needs to be as open and transparent as possible. Obviously, modeling is very technical in nature, but I do believe it should be, as with most things before a public service commission, they should be open and transparent.
On page 7 of your testimony, starting at line 14, you express, and I'm using your word, concern with using TMY data for modeling the wind resource from these projects.
Yes, I do have concern with that, although it's come out in this, what my understanding is that TMY data was not used in this proceeding based on the testimony I've heard.
So it's now your understanding that it was based on actual data from 3 years, is that right?
Yes.
Okay. Have you developed an independent assessment of the avoided costs for the 2 CBC projects?
I have not.
Okay. Since you have not completed any independent estimate of the avoided costs, is it accurate to state that your concern about the use of TMY data prior to your knowledge being corrected and for purposes of this proceeding was based on Northwestern's testimony in the prior CBC docket?
At least that docket and possibly others. Northwestern has testified and Ascend Analytics has testified that you need a certain amount of variability in the data for PowerSim to really run correctly.
Right, but that would have been in the prior docket that issue was discussed.
Yes.
Okay. And did you further state on page 17 of your testimony that you are, quote, troubled that CBC chose to use TMY data coupled with the SPP methodology?
Yes, I did state that.
Okay, has that concern been addressed?
Well, the TMY concern has been addressed, but using the SPP methodology to calculate ancillary services has not.
Okay. In several instances in your testimony, you used the term CBC assumptions. Do you agree that you used that term several times?
I agree.
Okay. For example, on page 9 of your direct testimony, lines 2 through 4, you state, quote, I do not know exactly what is causing PowerSim to not solve correctly. It could be a function of PowerSim itself or CBC's assumptions or both. Is that an accurate characterization of your testimony?
Yes, that is.
Okay. Are you aware of Mr. Durant's testimony stating that CBC retained Ascend Analytics to complete the PowerSim simulations for the CBC projects?
Yes, I am.
Are you further aware that CBC expressly requested Ascend to follow the methodology previously approved by the PSC at the time those simulations were performed?
I am aware.
Okay. Are you also aware, Mr. Stamitson, that according to Mr. Durant's testimony, other than modeling the specific generation of the CBC projects, the only other assumptions that were changed were to update the forward price curves for the mid-sea energy prices and AECO natural gas prices, as well as utilizing the latest EIA annual energy outlook natural gas price escalator?
I'm aware of that. They stated that.
Do you have any reason sitting here today to dispute Mr. Durant's testimony as to how the PowerSim simulations were performed for the CBC projects?
No, I have no reason.
So it wasn't the CBC assumptions as much as it was what the commission, to CBC's knowledge, told Ascend Analytics to do.
Regarding what?
Regarding using the prior commission order, updating the forward price curves, and AECO natural gas prices, as well as using the latest EIA annual energy outlook natural gas price escalator.
Yes, I mean, I believe that that Caithness did what it believes the commission has done in the past.
Okay, based on the prior CBC proceeding.
Yes.
Okay. And in fact, in order to comply with the commission's LEO test, isn't it the case that the only way to comply with that test is to use the last commission-approved methodology from its prior orders.
I'm going to object that it calls for a legal conclusion.
If he doesn't feel like he's qualified to offer it, that's fine. I'm just asking him his understanding of it.
Go ahead and answer the question, but you can,
I do believe it does call for a legal conclusion, which I'm not qualified to give.
Okay. Do you believe, Mr. Stamitson, it is important to model both the hybrid project, including the battery, instead of modeling the CBC projects as wind projects and modeling the battery separately?
Well, I mean, based on Dr. Doris's testimony, he believes that it wasn't necessary to go include the modeling of the battery itself, and he's, the expert on this modeling. I mean, obviously, the battery is an important part of these projects, but I believe it's more of a capacity asset versus on the energy side. And as the way it's going to be used, it's going to be used primarily for shifting energy and thus providing capacity during high load hours.
Okay, but you haven't done any independent assessment of that. You're relying on what Dr. Doris said. Is that correct?
Yes, primarily I am relying
Okay.
on his testimony.
But shouldn't the commission have both numbers? Instead of saying, well, we decided not to model it, that was what Northwestern is saying for whatever reason. I mean, they may have had good reasons. Shouldn't the commission have both numbers, both the number including the battery in the simulation of the hybrid projects, as well as the simulation of the wind projects and the battery separately, so we could compare those two?
I believe more information is better than less, assuming that they had the data to do so, which would require a sub-hourly look at how the battery is going to operate, particularly since it's Caithness's believes that they're going to use it to self-supply all their ancillary services, and that is largely sub-hourly.
Okay. And you're basing that statement on what Northwestern has said in this proceeding?
Partially.
Okay. So are you an expert on battery operation within the hour ahead, or any of that?
I am not.
Okay. Do you believe, all other things being equal, and that's always the tricky phrase, a hybrid project with a battery is more valuable to ratepayers than a standalone wind project?
I would agree with that.
Okay. On page 9, lines 4 through 6 of your direct testimony, you state that, quote, "It seems that Northwestern has not had issues getting the hourly version of the model to solve in past dockets where it has used and advocated for that method." Is that an accurate statement about your testimony?
That is an accurate statement.
Okay. And what do you base that statement on?
I based it on that they've been able to produce in their testimony hourly model runs with avoided cost estimates.
Are you talking about during contested case proceedings?
Correct.
Do you know how long it typically is between the time that a qualifying facility files a petition and Northwestern files its testimony?
Actually, I do not.
Okay. Would you agree, subject to check, that it's at least a month?
I would.
Okay. Do you know how long project developers or their representatives have waited to obtain hourly simulation results from Northwestern and Ascend?
I do not.
Okay. Have you ever talked to developers about these issues?
Not on a one-on-one type of talk.
Do you personally know how long it took Ascend to perform the hourly runs in the dockets you cite?
I do not.
Okay. In this case, or any of the previous avoided cost proceedings in which you have participated, have you ever personally requested a power simulation?
I have not.
Okay. Have you ever been provided detailed description of the power sim algorithms used for the hourly model?
If they vary from the monthly model, then no. I've gone through an operator's manual years ago where I've seen the underlying functions that really drive power sim.
And when you received those algorithms for the monthly model, did you independently review the accuracy of those algorithms?
I didn't independently review the accuracy, but I based on my expertise in econometrics, it pretty much meshed with my expectations of what should be used in those situations.
So is your preference for the hourly model based on an actual analysis of the algorithms, the operation of the hourly model, or is it entirely based on results?
It's not based on results. It's based on reality of how it reflects the realities in electric dispatch and trading.
Okay. And when you say the realities of electric dispatch and trading, are you talking about current market prices?
It's markets to a part, because obviously Northwestern is trading in the markets, particularly when they're long on energy and they have to sell it. But regarding their own dispatch, it's done hourly or even sub-hourly.
Right. But you agree that the monthly model does hourly calculations within it, right? I think you tested
Yes,
that already.
I do.
Okay. And so you would agree with me that if you take a snapshot in any given hour of prices in the market, it's difficult to make decisions going forward 2 years, 5 years, 10 years, 15 years about the value of making investment decisions on that one data point, right?
Yes.
Okay. So would you agree with me that in examining an hourly slice in time may not actually reflect overall system operation?
That individual hour, in the long run, no. But it gives you an insight of what goes on in that particular time frame.
Right, but it could be the case that the actual reality of the operation of the system deviates greatly from that particular hour, right?
Yes,
Or any particular subset of hours.
correct.
Okay. For example, do you know what assumptions the hourly model made regarding weather in Montana?
I do not.
Were you involved in the Grizzly Wind proceeding, docket D 2019 2.8, and Black Bear, which I believe is D 2019 2.9?
I was.
Okay. Are you familiar with the rebuttal testimony of Mr. Steve Thompson, an expert witness for Grizzly and Black Bear in those proceedings?
Yes, I did read it.
Okay. Do you recall in Mr. Thompson's rebuttal testimony, he outlined a series of difficulties in obtaining power sim results from both Northwestern and Ascend Analytics?
Mr. Chairman, if Mr. Root is going to ask the witness about the testimony, I'd ask that he be provided a copy.
Thank you, Mr. Rudy, yes. Oh, I wish we could put it up on the,
Is there a way to do that? This is from the Grizzly Black Bear proceeding, Steve Thompson's rebuttal testimony.
Do you have it on a flash drive?
I don't, I just have hard copies.
I can scan it and put it on my flash drive and upload it here.
How long will that take?
How many pages is it? About 15 minutes.
No, I think
yeah, I don't think it's that essential. Our attorney has, yeah. Yeah. Well, okay, great. Got it.
Can I have a copy? Or? Oh, yeah, I have one. That's nice. So, Mr. Stamitson, I've caused to be placed in front of you Mr. Thompson's rebuttal testimony. Could you please turn to page ST6?
I'm there.
Okay. And Have you had a chance to review it?
Yeah, I just read over it
Okay,
after you gave it to me.
does this refresh your recollection?
Yes, it does.
Okay. Do you recall that in Mr. Thompson's rebuttal testimony, he outlined a series of difficulties in obtaining PowerSim results from both Northwestern and Ascend Analytics?
Yes.
Okay. Did Mr. Thompson state, in fact, that Grizzly Wind requested a PowerSim run using its assumptions of November of 2018, but did not receive results from that request until May of 2019?
Yes.
Okay. So if a particular version of a model, in this case, we talk about the hourly model, it's really whether the hourly model is aggregated or not. I think you would agree with me. Is that right?
Right.
Okay. If that hourly snapshot version of the model takes months to solve, does that indicate a problem with assumptions or a problem with the model itself?
Well, I believe a lot of this really doesn't reflect on PowerSim's ability to solve. It was, I believe Northwestern even admitted in that hearing that they kind of dropped the ball because they were low on man hours and they were kind of swamped with work.
But would that explain all the delays that Mr. Thompson and other developers have experienced in obtaining hourly runs of PowerSim?
I'm not sure of other developers that had issues with getting hourly runs of PowerSim besides your clients.
Okay. Well, that would be two. It would be my client and it would be Grizzly and Black Bear, right?
Yes, I mean, assuming it was due to the hourly nature of the model.
Okay. And let me move on to the next line of questioning. I think that we've gone as far down there as we need to. Is it true that all the changes that Northwestern has proposed in this proceeding to its avoided cost methodology all have the effect of reducing avoided cost?
Subject to check, I would say yes.
And on page 9 of your testimony, starting at line 12, you express concerns with CBC's avoided cost estimate. Is that right?
I did, based on the fact that it's about double what the commission has approved in previous dockets. And
Right.
what the commission approves, obviously, these are administratively set rates, but they are considered just and reasonable.
Okay. And you state that sometimes it helps to focus on the results of the model rather than the assumptions, as assumptions in the model don't matter if the model makes accurate predictions. Is that right?
I did state that.
Okay. Do you believe that?
I think I sort of misstated that statement there. I should have just focused more in on just the results of your model.
Right.
In this instance, it doesn't really make a whole lot of sense. I will give you that.
Okay. Because it didn't sound like you. I mean, I know. Anyway. You further state that CBC's avoided cost estimates are around double the values recently authorized by the commission. And you also state this fact alone should give the commission pause when evaluating the reasonableness of CBC's proposed energy avoided costs. I think I said avoided. It should be avoided energy costs. Is that accurately state your testimony?
Yes.
Do you have any reason to doubt that Ascend Analytics performed the analysis in this case and that CBC followed the prior commission orders?
I have no reason to doubt that Ascend performed the analysis and that CBC followed what it believes to be the prior commission orders.
Okay. Do you have any reason to believe that their belief was in error or inaccurate?
I do not.
I'm just trying to track what we're asking about. Who is they?
Oh, meaning the CBC's experts. Do you have any reason to doubt that they didn't faithfully and honestly attempt to implement the commission methodology?
No, I do not.
Okay. You also testify on page 9 that in the previous CBC case, in the docket D 2018 8.2, the commission approved an avoided energy cost of $22.97 a megawatt hour. Is that accurate?
That is.
Okay. Do you know that the commission's avoided energy cost estimate in D 2018 8.2 was based on a mid-C forward price strip from July of 2017?
Subject to check, yes.
And do you agree, again, subject to check, that the average Mid-C energy price strip for 2019-2021 averaged $23.94 a megawatt hour based on the July 2018 price strip provided to CBC by Northwestern?
Subject to check, yes.
Okay. Do you also agree, subject to check, that CBC's avoided cost estimate in this case is based on an ICE Mid-C price strip from April of 2019?
Subject to check, yes.
And again, subject to check, do you agree that the Mid-C energy price strip from April 2019 averaged $32.59 a megawatt hour?
Subject to check, yes.
And without having to do the math in your head, I'm going to make it subject to check. Would you agree then, subject to check, the April 2019 Mid-C forward price curve is $8.65 a megawatt hour, higher than the July 2018 value relied upon the commission in its final order in D 2018 8.2?
I would agree.
Okay. So is it your position in this proceeding that the change in the current market price strip should not affect the avoided energy cost calculation?
No, that's not my position.
Okay. Is it irrelevant to the commission's determination in this case that the price from April of 2019 is significantly higher than the price from July of 2018?
It is relevant. Price strips are large drivers of avoided cost.
Do you agree generally that given the upward shift in the market towards higher energy prices based on the April 2019 number, that all other things being equal, that the avoided energy cost in this proceeding should be higher than it was in the prior proceeding?
All other things equal, I would agree.
Okay. Okay. I'm coming to the end, I promise. On page 13 of your testimony, starting at line 6, in discussing whether a carbon adder should be included in developing avoided cost, you state that, quote, currently, the district court orders apply only to the proposed MT Sun project, and QF's 3 megawatts or smaller that qualify for standard offer rates under the QF1 tariff. Is that an accurate statement in your testimony?
That is.
Okay, so I think we've already established you're not a lawyer, correct?
Correct.
Okay. So this is essentially a legal opinion on your part.
The court issued a stay, so I can read that. I mean, it's a lay interpretation of that.
So you're talking about the Supreme Court issuing a stay, is that correct?
Yes.
Okay, did the Supreme Court issue a stay in the Montana Sun proceeding?
No.
Okay. Can you recite the basis for Judge Manley's order on carbon in the QF1 case?
It's been a while since I read it, but I believe it had to do with the commission had used carbon adders previously.
Did Northwestern recover a carbon adder in the acquisition of the hydroelectric assets from PPL Montana?
They didn't recover a carbon adder, but they used CO2 as a justification for their purchase price.
And in fact, of that, I can't remember the exact number, $897 million acquisition price, roughly 30% of that was in an estimated carbon cost avoider?
I believe so, subject to check.
And again, this might be outside the area of your expertise, but to your knowledge, is discrimination against qualifying facilities prohibited by PURPA?
I do believe that.
Mr. Chairman, I guess just to be clear that he's answering the question as an economist and not a lawyer, since we're doing that freely here.
I think that's fair to note.
Okay. So, Mr. Stamitson, do you need me to repose the question, or do you recall what I asked?
About non-discrimination.
Right.
Please restate it for me.
To your knowledge, is discrimination against qualifying facilities prohibited by PURPA?
To my knowledge, it is.
Okay. Last question. On page 17 of your direct testimony, starting at line 1, you express concern that CBC did not have Ascend Analytics use the PowerFlex model to measure the ancillary service impacts of the CBC's projects on Northwestern's system. Is that an accurate summation of your testimony?
That is.
Okay. Are you aware that neither Northwestern nor Ascend Analytics used the PowerFlex model in this case?
I am aware. I know Northwestern is proposing using an oat tariff instead.
Okay. So does that address your concern that we didn't use it, they didn't use it, we're all using different things?
I'm okay with the oat suggestion. You know, the oat is non-discriminatory and transparent,
Okay.
assuming it is calibrated, correctly.
Sure. All right, let me ask you one last question. Is the Montana Consumer Council a participant in the OATT proceeding?
I am not sure about that.
Okay. That's all the questions I have, Mr. Chairman.
Thank you very much, Mr. Uda. And now we'll turn to staff, to Attorney Casey. Mr. Casey.
Thank you, Chairman. Good morning, Mr. Stametson. How are you?
I'm good.
Good. So, I'd like to start with just a couple of questions regarding your testimony pertaining to Ascend Analytics Power Sim hourly model. In your testimony, you expressed, and in previous dockets, I believe you've expressed concern over the transparency and I think your word is tractability of the hourly model. Is that accurate?
That is.
Okay. It's my understanding that there's been additional data that's been presented both prior to this hearing and in this hearing to support the hourly model. Is the evidence that's been presented in this docket sufficient to satisfy your concerns?
Partially. I do think they've made some leaps and bounds regarding transparency. There are still issues regarding, the model solving, and that kind of concerns me a bit. But I do think that the commission can make an informed judgment if they wish to move forward with the hourly model.
Okay, so when you say that there's problems with the model solving, I guess are those concerns regarding the accuracy of the model?
Well, it's the stability. I mean, and it would be accuracy too. I mean, if it's not solving, there's some issue there, and that can affect the results.
So it's my understanding that the hourly model is essentially, it's the same as the monthly model. It's just broken down on a hourly basis, or rather isn't aggregated into that monthly basis. So if there's accuracy or sustainability issues in the hourly model, would there be those same issues in the monthly model?
There should be. I mean, but I just don't know why that the monthly model seems to solve easier than the hourly model, or at least that's the impression I've been given.
Okay, so regarding, well, let me get this off the table. So your issues with transparency of the hourly model have largely been alleviated in this docket. Is that accurate?
Yes.
Okay. Regarding the other issue, is there anything you can point to that you think would fix the problems that you currently have, or is that just sort of something that appears to exist within Ascend Analytics that appears to be problematic in your mind?
Yeah, I can't really point to any solutions. Maybe if they did a rundown of why the model is not solving in a timely manner or is breaking down.
Okay. So during his opening statement, your attorney, Mr. Brown, suggested that this docket is sufficiently distinguishable from other QF dockets that we've dealt with, that this might be a good opportunity to, I believe, deviate from certain precedent that's been set in prior QF dockets. It appears maybe the hourly model is one of those instances where deviation might be appropriate based on resolution of some of your concerns. Are there other specific issues that you believe warrant deviation from any prior commission precedent?
I can't think of any really besides the hourly model.
Okay. Okay. So I want to shift now and talk about contract length. for just a moment. It's the MCC's position that a 25-year contract is excessively risky for ratepayers, right?
Correct.
And that a 20-year contract is also similarly excessively risky?
Well, it's less risky than a 25-year, but yeah, the longer the term, the more the risk.
Fair. But it is your position that a 15-year contract is appropriate?
I believe so. I believe it strikes a balance between financeability and consumer protection.
Okay. So I guess that's what I want to touch on, is that it's your understanding or it's your position that 15 years is sort of the threshold at which financeability and consumer.
Here we go again. Oh, boy.
Quick, grab the cash.
Yeah, we are close to noon, so if we have to break for lunch, we will, but let's wait 5 minutes anyway and see what's going on. Yeah, why don't we say 1:15, we'll be back. And hopefully the lights will be back then too. So the news media can't claim that the Public Service Commission is always in the dark. So we'll see you in an hour and 15. All right, all right. Let us go back on the record and get serious here. You know, we Public Service Commissioners are experts on electricity. Just couldn't start my car. All right. Well, where did we leave off here? We were with witness Mr. Stamitson, and let's see. Had you finished, Mr. Casey? Yeah, go ahead and continue then with your questions, please.
Thank you, Chairman. Okay, Mr. Stamitson, when we were interrupted, if you'll recall, I believe we were talking about sort of, I guess what I perceive to be these inversely related criteria of forecast risk and financeability for a QF and their relationship to the appropriate contract term. First of all, are there other criteria you consider on the QF side other than financeability in terms of what would be appropriate for length of contract?
Well, I'm personally not really that concerned with financeability because, you know, I'm just representing the ratepayers who are going to pay for this. I mean, obviously, financeability is a part for the QF, but I don't know how. I mean, there's probably some case law in PURPA that relates to that, but PURPA itself doesn't discuss that. It just discusses avoided cost, and it leaves the contract lengths up to individual public service commissions to set. You know, FERC doesn't get involved in that.
Sure, but financeability from your perspective sort of creates, I guess, a floor because PURPA requires long-term contracts, and we won't get into that, but with regard to the issue of financeability, I believe in your testimony you state that you believe 15 years is appropriate, at least in part because there are QFs in other states that have secured 15-year PPAs and have managed to proceed to construction and operation based on a 15-year contract. Is that correct?
That is correct. I mean, there's some testimony for the Washington Utilities Commission that the QF interveners they want 15 years of fixed terms, basically, and if they seem okay with it, it seems to me that you know, Montana QF should be able to do it. I mean, there's already one QF that has a 15-year contract that should be online by the end of this year, and one of the Northwestern acquired a CREP resource with a 15-year contract, so they seem to be financeable.
And those are facilities that are here in the state of Montana?
Those two, yes.
Okay. Any other states other than Washington that you've observed 15-year contracts?
I did a piece of testimony a while back looking at contract length. I think North Carolina sets contract length at like 10 or 15 years. I know Utah and Wyoming, they're at 20, but you know, they're less than 25.
Less than 25, but not necessarily 15?
Yeah, well, in those two examples, I believe Washington and Oregon, some of the utilities set them at 15 years, or at least 15 years of fixed price terms, and they might have an escalator after that.
Okay. So with regard to the second half of, I guess, what I'm perceiving as sort of a balancing test, that second half being the risk to ratepayers, how do you determine 15 years is sort of the threshold at which that risk becomes tolerable?
Well, I prefer even shorter, to tell you the truth, but, 15 years, I can live with that, and I think it adheres to, the mini PURPA at Montana, encourage these long-term contracts.
So can I understand your position to be that all other things being equal, it's more difficult to predict what will happen further out into the future, and that 15 years is sort of a floor at which you've observed other facilities to successfully proceed to construction?
I think you could sum it up that way.
Okay. Thank you, Mr. Stamitson. Thank you, Chairman. No further questions.
Thank you, Mr. Casey. And let's see, I think we'll go to Commissioner Pinocci first.
No questions, Mr. Chairman.
And then Chairman Johnson.
Thank you, Mr. Chairman. I don't have any questions for this witness.
And Vice Chairman Lake.
Chairman, neither do I. Thank you.
Wow. I have a few questions. I'll try to keep it brief in consideration of the day here and what we still have ahead of us here. I think the question was answered that I had noted. I believe it was one of Mr. Casey's questions about whether you were satisfied that there's enough tractability and transparency now for the hourly model to be used, and with some reservations, it sounds like you basically were, that there's been enough improvement by Northwestern that it's acceptable to you at this point to use.
Yes.
Okay, yeah. Let's see, I'm not sure what page that is on. It wasn't. Okay, let's talk a little bit, Mr. Stamitson, a little bit more about contract length, if you don't mind. And I find it, do you recall in the previous, the Caithness 1 docket, Mr. Redinger, who was with Key Bank, pardon me, making the statement, and I realize this isn't in this record, but it's a jump-off point for a discussion. Banks will provide financing at for any contract between a developer and an investment-grade purchase power agreement, irrespective of its length.
I do recall that statement.
And yet there seems to be something magical about a certain number that this commission is being asked to come up with, be it 25, 20, 15. At one point, we had a 10-year position that didn't last too long. But I guess, let me ask you a question. It's kind of a legal question, but maybe you can give me some answer to it. And I was talking with I can't remember how to pronounce the name anyway, with a witness this morning. Kelly, there we go. Oh, I remember Kelly. And that is the idea of having, if you're going to have a long contract, to have contract reopeners, I think was the term that she used. Schermerhorn, is that it? Yeah. And my idea, what I was driving at is just for the benefit of all parties to have that contract have the ability to be readjusted based on certain criteria that's set in advance. But since these forecasts, the further out they get, the more wrong they are. And frankly, you know, I have to say, I'm here as a commissioner being asked to put my signature to something in terms of these forecasts and the ultimate avoided costs that they're based on, that is based in part on these many forecasts and escalators and so forth, that I know is wrong the minute before my ink is dry, and it bothers me. But it would bother me less if I knew that there was the opportunity to make reasonable adjustments that reflect the market. So my question is, sorry for the long question, is are you aware if these potential contract openers, reopeners would violate PURPA? Is it your understanding that they would violate federal law, not state law, but federal law? Or what are your thoughts on that? And I realize that's a legal
Yeah, I'm not really
question,
sure
but-
if they would violate PURPA or not. I just know, I think in general, QFs don't like that because they want price certainty, you know, for their, you know, because of however their business model is, you know, it's easier to sell their product.
Well, I'm going to be real direct about this. It seems to me that and correct me if I'm wrong about this is meant to be a question, but that QFs, in this case CBC, is coming to us with a certain case for a certain price and terms and so forth, and saying that it cannot be financed unless they have a long-term contract. It seems to me what they're saying is that the case they're making to us, they can't make for their the investors don't agree with. And so they come to us, and we pass the risk on to the ratepayer. That's kind of a harsh way of putting it, but it seems to me if their case is strong, and the risk-reward ratio is what it should be for either us representing, you know, in part the ratepayer, of course, and or investors, then they should be able to make the case to the investors. Why should they be requiring certain length contracts with us that have no adjusters built into them or anything else? It's only this way, or they can't get their investors to buy in.
I think that has to do a lot with the particular business model. The longer the term the contract, the more debt you can have in your capital stack, the less equity you need. So I think that's it. But I mean, these are PURPA projects. They're guaranteed a place to sell their output, you know. So that means something, you know, and you're selling it against a utility. I mean, the old saying is a utility is like a bond. I mean, they're a regulated utility particularly, you know. They're protected by the Public Service Commission. You know, they regulate them, but they also protect them because you don't want a utility to go bankrupt. So you always have a market for your product through a buyer that is, you know, a good buyer that isn't going to go anywhere. So I mean, I wish they would adjust their business model a bit.
Yeah, I mean, essentially because of PURPA, we're dealing with a different kind of animal here, aren't we? And it sounds like we're not attracting the entrepreneur as much as we're attracting, or at least tying into the entrepreneurial spirit of the greater the risk, the greater the reward, but rather just the guaranteed return. And it's hard for me to, short of allowing for periods of time when adjustments can be made, it's hard for me to justify in my mind, passing that on a silver platter over to the ratepayer. I have a real challenge with it. It doesn't seem like good economics, and in the long run, it doesn't seem like it serves any of the parties. But anyway, I'm making a speech, and I apologize for that. But you're pretty convinced that even if there's a compromise or a balance in that world that we're living in here, that 15 years should be certainly sufficient.
I believe so, and I think it's financeable. And after the end of the contract, if there's any life left in the project, they're entitled to another contract, and at avoided cost at that time.
what's in order here. Some of these questions have been asked. And I'll pass on that. Again, I'll just ask one other question, Mr. Stamitson, and that has to do again with the question of the carbon adder, and we can go around and around, and that again it's been talked about a lot in this hearing. But I guess my question is, because it's been the Commission's recent position that you don't charge the ratepayer for something that doesn't yet exist. But is it, two or three questions with regard to that. One is, do you feel it would be reasonable to have a PPA that where carbon penalties, carbon costs would come in as soon as they are in fact real and existent? Have you seen contracts like that, and do you think that's reasonable, whether it's 5 years out, 10 years out, where there's some contingency there?
I've never seen any contracts like that, but I think it's definitely a possibility. It just depends on exactly how the price manifests itself. If it was a tax, it's pretty straightforward. It'd be pretty easy to incorporate that versus something like the Clean Power Plan, which we knew if it went into effect, it would have put a price of carbon in the market, but it'd be really hard to pull it out. But yeah, I think there could be a contract structured in some way which would allow carbon pricing in the future. But like I said, it really depends on how the pricing is.
And secondly, do you believe, we've had some discussion about this, do you believe that at Mid-C that the CO2 costs are already being visited on utilities in places like Washington and Oregon are reflected in Mid-C?
I don't think explicit CO2 costs are in there. I mean, utilities in California that purchase fossil generation from out of California basically get tagged for it and they have to pay for it. But if you're buying fossil generation from California, my understanding is you don't pay for it. Now the policies, California implemented a carbon tax, and that has affected the generation mix there. Obviously you're penalizing fossil generation, so you want more renewables, plus the building codes, no new buildings have to have solar. So that increases the amount of zero marginal cost generation in the market. That depresses power prices. And, a lot of times power prices are negative around California because of that. And that is actually working its way up to Mid-C. So I think it's actually having the opposite effect. The generation mix is causing power prices to be depressed from CO2 policy.
Interesting. Finally, are you convinced that the QF retaining the RECs is sufficient protection for them and assures that they would get a proper, if you will, market-based, because it's a tradable thing, compensation for the eventuality that a carbon penalty would come into play here in Montana?
Well, theoretically, the RECs are supposed to contain all the environmental attributes of renewable generation, so it should contain carbon dioxide. And there are a lot of large companies and firms that want clean energy. They want either PPAs through the utility to buy RECs, and a REC from a wind farm doesn't shows that 1 megawatt hour of carbon-free generation, so it should have a value.
Would it have a value now?
I mean, RECs have value now, and I guess that value should reflect carbon dioxide, avoidance from that product.
Okay. Well, thank you, Mr. Stamitson. I appreciate your answers and your time. At this point, we'll go back to recross Mr. Uda.
I just have a few questions, Mr. Chairman. You mentioned, Mr. Stamets, that in Oregon and Washington, there are 15-year contracts and then some kind of escalator.
Yes, I believe it was Oregon. I mean, memory's a little fuzzy, but I remember seeing it was like 10 or 15 years, and then there was an escalation based on like natural gas prices.
So if it's a fixed 15-year price and then an escalator, I assume then the contract term was actually longer than that.
In total, yes.
What was the actual contract length?
I want to say it was probably 20 years.
Okay. And so, in that 5-year additional period, they know they've at least going to end up with the amount of revenue comparable to what they got the first 15 years. Is that right?
Well, they should. I mean, it depends on what direction gas prices go, though.
Right, but unless gas prices go negative, they're going to make more money on the back end of that contract than just the fixed price if there's an escalator that kicks in year 15, right?
Yes.
Okay. What is that QF contract in Montana that has a 15-year contract?
It's South Peak.
Okay.
I don't know the name of the CREP project. It's a small solar project. They have a 15-year contract, too.
And I think you mentioned, and I'm not sure if you were offering a legal opinion, that there's nothing in PURPA that talks about contract length? Are you sure about that?
I'm not positive about that. I mean, I focus on the avoided cost and you know, the issue of ratepayer indifference particularly.
So you're not familiar with any court cases or?
Well, I think there's, like I said, I believe there's case law, but I'm not familiar with the case law.
Okay. So you're not entirely sure that there's nothing in PURPA that talks about contract length?
The only thing I know is Montana's mini PURPA that encourages long-term contracts.
Right, and then the dispute, of course, is about what a long-term contract is, right?
Correct.
Right, okay. I wanted to ask you about your opinion about rec value incorporating all environmental attributes. If the environmental attributes today are discounted by the market, and yet the rate is locked in today, and then in 2028, there is a substantial carbon adder, isn't it the case that the entire value of what you claim is incorporated in the rec is not captured in that initial decision?
Well, the rec should be theoretically worth more at that point because they should capture that value of CO2. I mean, there could
But
be,
they've already signed a contract, locked in the rate, right?
yes, but they would retain their recs, so they would
So
be,
your proposal is that they retain the recs?
yes.
Okay, all right, I got that. Okay. No more questions, Mr. Chairman.
Questions, Mr. Brown? Oh, wait, no, wait, I'm sorry, he's your witness, excuse me. Questions, Ms. Hill?
No, Mr. Chairman, no questions.
Redirect, Mr. Brown.
Yes, I do have a few, thank you. Mr. Stamets, before the power outage and lunch, you were discussing PowerSim. Do you recall those questions?
I do.
I guess I'll just ask you generally, despite CBC's concerns about a lack of transparency with PowerSim, is it your opinion that the PowerSim results are the best evidence we have in this proceeding with respect to Northwestern's avoided cost?
I do. I wish there was more sub-hourly data on the battery, but
And then I think it was Mr. Uda who had asked you about how much of sort of the presumed value of the hydros was attributable to CO2 avoidance. Do you recall that?
I do.
Did Northwestern agree with the MCC's assessment of how much of that value was attributable to CO2 in that case?
No, they did not.
Mr. Uda also asked you about whether PURPA prohibits discrimination against QFs. Do you recall that?
I do.
Do you know whether the non-discrimination provisions of PURPA that Mr. Uda was asking about apply to more than the avoided cost rates themselves?
I do. I believe they do not.
And then Mr. Casey had asked you whether there were any other deviations from precedent that you were aware of in this proceeding, kind of on the table for the commission. Do you recall that?
I do.
Is the implied, if the commission were to agree with Northwestern's proposal in this case, would that be a deviation from precedent on the issue of implied heat rate?
Well, yes, that would be a deviation because they used the static heat rate assumptions last time.
And do you have any position on that, whether they should accept that in this case?
I think there's a compelling argument for declining heat rates. I personally don't see the addition of renewables letting up anytime soon on the grid, especially with the actions particularly of California and their zero emission goals in the future. I think Washington's moving the same way in Oregon. That means much more renewables in the system, which lowers power prices. Then the whole question is, how do gas prices react, relative to that? If they're stable and you decrease the electricity prices, the implied heat rate declines. If gas prices were to increase, it would decline. If it was to decrease, then it would increase. The implied heat would increase, and I don't know. I believe gas prices are pretty low. I mean, they could go lower, but I don't think for the long term. But with the addition of renewables in the generation mix, I think there is a compelling argument that implied heat rates are going to decline in the future. And I believe Dr. Doris in his testimony did cite some other utilities that are starting to incorporate declining implied heat rates into their forecasts.
And then with the respect to condition 3, if the commission were to accept Northwestern's calculation of avoided cost in this proceeding, would that represent a deviation or departure from precedent on that issue?
Yes, if you were going to value condition 3 at 0.
And I'll move on. You were asked about this balancing of forecast risk and financeability. And it sounded like financeability is not something that you consider when determining or assessing avoided cost. Is that accurate?
That is accurate.
Should the commission consider QF financeability when determining the costs that are avoidable by the utility?
No.
And then you had gone through a few of the contract lengths in other states. Do you recall what the approved QF contract length is in Idaho?
Yeah, for over the standard offer, I believe it's 2 years.
And I was a little confused by Mr. Casey's characterization of a floor. I wasn't quite sure what he meant by that. I want to make sure we're clear, because didn't you respond to some of his questions that you would actually prefer shorter contract lengths than 15 years?
I did.
And that in addition to now Idaho's contract length of 2 years, there are states, I think I heard you say, that approve contract length shorter than 15 years?
Correct.
And then, do you recall what you've previously recommended? Is it to the commission specifically for contract length before, let's say, several years ago?
I believe it's 3 to 5 years.
So would it be more accurate to characterize 15 years as a ceiling when it comes to your recommendation in this case?
Technically, yes.
And then I was honestly just not following, I think, Mr. Uda's last question about how QF contracts with, for example, a 15-year fixed rate and then a reopener for 5 years with an indexed rate. I think he asked you whether they would make more money. I
think counsel is mischaracterizing Mr. Stamison's testimony. I affirmed it with him. He said a 15-year contract with an escalator at the end, not a reopener.
Okay,
I'm just objecting on foundation grounds.
okay. So what he said, and I think the question was whether that contract would make more money on the back end than the front end, and you agreed with that. Do you recall that?
If that was my question, that was a dumb question, so I didn't mean to say that, so.
Do you recall that, Mr. Samuelson?
I do, and I think the whole assumption is basically gas prices would be positive inflationary, so that would cause, an increase in the rate. But, I mean, they could go down. I mean, they're pretty volatile, so you really don't know exactly what's going to happen over that time frame.
Okay, thank you. That's all I have.
Very good. Thank you, Mr. Brown. And
Mr. Chairman, with your, I know it's getting late, I just have like one question I want to ask Mr.
Sure, I'll allow
Samuelson,
that.
just to
You bet.
clarify it. You discussed and redirect with Mr. Brown that Dr. Doris had claimed that there were other utility filings that had cited a declining heat rate, which results, I think you would agree with me, in a decline in market prices over the next 15 years. Is that your understanding?
Yes.
Have you independently verified any of the forecasts for any of those entities that Dr. Doris claimed in his testimony?
I have not.
Okay, thank you. That's all I have, Mr. Chairman.
Thank you. And if there's no additional questions, and Mr. Stamets and you are temporarily excused.
Thank you.
We have arrived at the point in this hearing where we're allowing for some rebuttal testimony for some witnesses to be recalled, and the first opportunity would be extended to Northwestern Energy.
We don't have any further witnesses to call. Thank you, Mr. Chairman.
Hardly makes sense to ask MCC if they're going to recall Mr. Stamets. So at this point, Mr. Uda, you're on.
Mr. Chairman, if I might, in the interest of efficiency, to try to shorten this up, I need just a brief conference with my client to emphasize both the need to have a complete record and the counterbalancing consideration of the fact that we've been here an awful long time.
We are off the record for, what, 5 minutes?
I think 5 minutes should be adequate.
All
Thank
right,
you.
approximately 5 minutes. Thanks.
Mr. Chairman, we are ready to proceed. I hopefully have truncated the question sufficiently, and hopefully the witnesses will remember not to belabor their answers.
Okay, well, we will now go back on the record, and I should note also that Vice Chairman Lake is going to have to leave no later than, I believe, 1:45. Is that right, Vice Chairman? 2:45. What am I saying? Quarter to 3. I have to leave no later than probably 3:30 for a meeting back in Bozeman, and we've been at this for, what, 4 days now, right?
Yeah, I was really hoping this one would be shorter than the last one.
I measure the number of days by the progressive growth in Mr. Casey's and Mr. Regala's beards, and we are definitely at 4 days. So let's go ahead and call your first rebuttal witness, sir. Yes.
Apologies, Mr. Uda. I think before we move into rebuttal, we can resolve our the pending evidentiary issue and admission of data responses.
Yes.
So I spoke with Ms. Hill during our intermission, and as I understand it, you all have reached a resolution as to admission of data responses, and the data responses identified, as I understand it, in the pre-hearing memos are moved into the evidentiary record, except for the following, which, as I understand it, CBC no longer wishes to move in. And if I'm misstating anything, please correct me. But those are CBC 33, CBC 34, CBC 38, CBC 63, CBC 91, and CBC 97. In addition, CBC will supplement the record with redactions to CBC 15, CBC 20, CBC 29, and CBC 31. that consistent with everybody's understanding?
I believe so. I didn't have my list in front of me when you did it, but if there's any correction, I will communicate with council and make sure we get it cleared up. But I think that's accurate.
Perfect. Thank you.
Well, then we will move into the record without objection. Yes, Ms. Hill.
No objection on the data request. I just had one question about the order of witnesses as we proceed.
Okay, well, let me just finish this. So with the exceptions and redactions that were noted by Mr. Casey, all other data responses will now be admitted into the record. Yes. Ms. Hill is next.
I was just wondering if I could hear the order of witnesses that we intend to have for the rest of the day.
Sure, that's fair. And I'm going to try to do my best to get through all this by the time that Commissioner Lake has to depart these premises.
Sounds like Mr. Brown has something urgent to bring up here.
Thank you, Mr. Chairman. Before we move on, sorry to be nitpicky about this, but having lived through the era where we simply assumed that all data responses would come into the record, except those that are specifically objected to by any party before the proceeding, which I think, as you all know, is, in my opinion, a far easier and more efficient process for this. And sorry to digress.
I concur.
Mr. Uda concurs. I think the chairman said that all other data responses would be admitted. I think, did you mean that all data responses identified in the pre-hearing memos?
Yes.
Okay. And
shall we?
I guess I did just want to note in the same spirit that, this will now require looking at 5 separate documents, including the transcript, to determine which data requests are actually in evidence, which, again, as you all know, I don't think is the most efficient process for this, but that would be the pre-hearing memo of CBC, the pre-hearing memo of Northwestern, the pre-hearing memo of PSC staff, and the transcript.
Is it
Thank you.
preferred by all parties that we simply admit all data responses, not just those identified, except for those that were accepted to?
If the commission would like a motion to that effect, and there's no objection, I'm happy to make one.
Mr. Uda?
Are you asking if I agree with Mr. Brown?
Yes.
Ordinarily I would say yes. The only reason I'm hesitating here is because if this was the background rule going on, I wouldn't have had to spend all the time going through all the data requests. But in general, I agree with him. I don't know if I would apply it in this case, but I'm 50-50, I guess, on it.
What do you prefer, Mr. Brown? I'll let you make the motion if you want to.
And I apologize, Mr. Chairman. I don't mean to complicate the record or what the others have worked to establish here. So I will not make that motion, and I appreciate everyone's time in hearing out. I know these issues are kind of constantly evolving, so thank you.
Well, you make a good point, so I appreciate that. Okay, Mr. Uda, you can proceed.
Go
ahead and give your order.
Ms. Hill wanted to know the order, which I think is fair. So the first witness, because he is the one most imminently needing to depart, is Mr. Grant. Second would be, because he is second in the order of needing to depart, is Dr. Borison. Third, because I believe he is third in order for needing to depart, is Mr. Narenberg. I think I have this all flow-charted somewhere. And then finally, it would be Dr. Sagal and Mr. Durand. But we have very few questions, and we promise not to unduly consume hearing time.
Thank you for that, and you can call your first witness.
Thank you, Mr. Chairman. Caithness recalls Darrell Grant to the stand.
Be advised, sir, you are still under oath.
Thank you.
Mr. Grant, if you recall from yesterday's testimony, Ms. Muller of Northwestern said there should be a deduct from avoided costs for the internet connection costs. Do you recall that testimony?
I do.
Do you agree with Ms. Muller's testimony?
I don't.
Can you please explain for the commission why?
Because CBC is making payments for the interconnect now. So and we also have security in place. If we don't pay, she can pull the security. What it means if there's going to be a deduct, we'll be paying twice. I think Ms. Muller might have misspoken. It should have been an addition to the avoided costs.
So yesterday also, Mr. Steinmetz of Northwestern testified that CBC's definition of firm power was unconventional. Do you recall that testimony?
I do.
Okay. Would you like to respond to Mr. Steinmetz's claim that CBC's definition of firm power is unconventional?
Certainly. The avoided costs that Northwestern generated is the same costs that a wind-only project would receive as our project with a battery. The fact that we have a battery and we're going to be given a firm product, this should have a lot more value to Northwestern. And the fact that we have guarantees in place, what that really means in a nutshell is that we're outside of the normal conventions of what firm is in WSPPC and such definitions. What makes sense, and this is exactly what we presented, is a formula if we don't perform within certain bands, which is going to be much better than a wind-only project, then we have penalties. So that's it in a nutshell. Secondly, he also mentioned that 34 megawatts and there was a $300 cost, which is nothing. The 34 megawatt outside of the bandwidth that he spoke about, although it's 300 megawatts, if we were to maintain that for the full year, that's $2.6 million. It's not insignificant. And remember, they're looking here at, under the oath, $3.6 million. So one of the things that we try to do, because I spent 20-odd years in the utility, is anticipate certain issues and solve them ahead of time. So I just wanted the commissioners to recognize here that what we're doing, if we are wrong, they'll get the money. One other thing.
Mr. Grant, I was having made an issue out of this being a question and answer session.
Yes, I'm sorry.
Let me ask you, is there something else that you were about to say to the commission? I don't understand what you were talking about.
Yeah, one of the things that the commissioners, and the analogy I want to give in this very short half a minute, is that if you go to Las Vegas and you go to Disneyland, you have timeshares. And the person will come to you and they say, okay, we'll sell you a room 2 weeks of the year for $20,000. Basically, it's 26 times he's selling the same room. This is the analogy under the structure that Northwestern has for us here, is that they're saying to us, go and pay $3.6 million under the oath. Every year, if you do that by 15, multiply that by 15 years, they could buy a fleet of area plants. That's the point I want to make. It's unfair.
Okay. So, Mr. Grant, do you recall whether or not you testified that the annual capacity rate for the CBC project was variable?
No, I did not testify to that. What I think in talking around, counsel might have misunderstood what I said. Northwestern and Caithness agree on this issue. It's $176 per kilowatt year. So if you divide that by 12, it's $14 something per kilowatt month. We agree to that. The variable bit is going to be the capacity.
Okay. Would you please state the steps that CBC took to ensure that the hybrid project addressed the Commission's concern?
Certainly. What we did, as I said before, we listened to the commissioners, we read your order. And what we did is we went back to the drawing board, although we believe that we were correct. And I'm not going to be here sitting arrogant and say, yeah, we're 100% sure. We believe we're correct. But we designed around the order. And the primary issue was the battery and the battery size. And Dr. Doris yesterday, he had this thing on the board there saying that 1.7 megawatts is available. That is wrong. It doesn't comport with the precedent. If you look at my, and I have it here, within my testimony, and that is, this is the rebuttal testimony, DA6, Table 4. If you look at that, you see we were using what was approved in Caithness in the first project, which is 6% of nameplate. And that was the same number that was for Inc., that is, and that was the same number that was approved for the Grizzly project. And if you do that, its total amount of ancillary service requirements is 10 megawatts. We have a 40 megawatt battery, so you have nearly 30 megawatts available to do whatever it takes to ensure that we are within the ramps. So I disagree, and this is part of the problem that we have encountered, is that it's a moving target. Things don't change where it's going to move from 6% to 20-odd% in 6 months. It doesn't make any sense to me. So that was one of the critical changes that we made. And the other thing that we did is because I remember Chairman Johnson said, how can I make a decision? You're using this model and Northwestern is using that model. And that made a lot of sense. So what we did, we went and we hired Ascend. And we said, Ascend, use the model and use the commission-approved methodologies. And we got a price. Now, there's been a lot said here. That's a methodology. All we're doing is following the rules. That's it.
On that note, are you referring to, Mr. Grant, the implied heat rate?
Implied heat rate, yes.
Okay.
And I'll say this. Implied heat rate cannot be an input into the model. That's supposed to be, but Adam will talk about that. But implied heat rate, the gas price methodology, the condition 1, 2, and 3, and there's another big change, and that is the transmission adder. One of the things that we have in our PPA, and a lot has been said about sub-hour numbers. In the PPA, we have a provision that says that we, meaning CBC, are willing and we want to, once Northwestern joins the EIM, for 15-minute schedules. Once we go to 15-minute schedules, and Hollis will talk about that, we can, any mismatch in terms of ramps and what we can do will be much improved because we have a shorter duration to schedule. We said that we're willing to go there. That was removed from the agreement. But the key thing here is that under the EIM, and that was testified to yesterday by Northwestern, transmission costs, there's no transmission costs. Northwestern is looking in the rearview mirror. We've got to start looking ahead. They're going to join the EIM, and the model should reflect those assumptions.
Okay. One last question, Mr. Grant. Is the capacity of the CBC projects 80 megawatts or 60 megawatts?
It's 60 megawatts. And it's written there. It's in 2 or 3 places within the PPA. It's there in the whereas, which is not, it's a description, so it's well documented there. And in the definition of the project, it talks about 60 megawatt wind project with a 40 megawatt hour battery. I don't see how we can get to 80 from that. And the other thing is, I know that council, due respect, she talked about 55 megawatts. It's 55 megawatt hour. 55 megawatt, we're not changing the 20 megawatt that you can put out from the battery, the discharge rate. That doesn't change. And the reason why we talked about 55 megawatt hours is the thing declines. And like anything that declines, if you start out at 40 day one, 1 year from that, it's no longer 40, so you've got to be a higher number.
That's all the questions I have, Mr. Chairman. I would tender the witness for cross-examination.
Ms. Hill, Cross?
Mr. Grant, could you look at PSC 4, the response, which is the updated PPA that you provided?
PSC 4.
Yeah, she'll bring it to you. And I'm going to refer you to the recitals page, which if you flip through it's the 5th page, recitals. You can do the,
It might be up here. I don't know.
doesn't that say 40 megawatt hours and not 55? That's all I'm asking is just, does
Yes.
that say, okay,
Yes.
that's the answer to my question,
Yes.
so let's keep moving on. The other thing I wanted to ask you is about PTCs. Just, this is kind of to help just clarify the record. I understand that you need a commercial operation date by December 2020 for the PTCs,
To qualify for 100% of the PTCs.
but you can do 5% for a safe harbor provision of your capital?
No. No.
Okay. I know we're trying with time, but is there a safe harbor provision?
Yes.
Is CBC under that safe harbor?
Yes, but it's start of construction in 2016, I think, December. We built 4 foundations, and that's the way we got in.
Okay.
And we have got to now get in service before December 31st.
Now, did you put $8 million in for that construction? Was that the $8 million, I believe?
Oh, for the development of the project to date.
Is
We
that-
had to acquire land. We have 12 anemometers there. Oh, this is.
So I'm trying to clarify the $550 million project.
Okay. What are you trying to clarify?
Your safe harbor is not based on a percentage of that $550 million?
No. Well, let me back up. Because I think we're talking apples and oranges. There are many ways you can qualify for PTC.
I think that's
Yeah.
the answer to my question.
Yeah, there are many ways you can qualify.
Okay.
Yes. But, well, once he stops whispering. But, but once you elect, and we elected start of construction, we're locked in.
Okay.
That's the key thing.
The transmission tariff, we're talking about your self-providing ancillary services. I understand that CBC does not want to be held to the rates in the interim tariff that FERC has approved on an interim basis.
That's correct.
And I believe it's CBC's position that those rates are too high and that Northwestern hasn't proven its case in that FERC docket.
That's correct.
So if FERC approves lower rates than the interim, which would seem to be consistent with CBC's position, would you be okay with those rates?
Those rates for what?
ancillary services to follow the OAT tariff that FERC approves.
But
You're-
we want to self-provide, so
So
that's the issue. We want to self-provide.
So I think the answer is no, you would not be okay with the OAT tariff rates, even if they're lowered, because you want to self-provide.
That's correct.
Okay.
That's correct.
Dr. Ben Fitch-Fleshman, in his testimony, he recommends separate prices for heavy load hours and light load hours. And so do you agree that CBC will receive a higher value from the battery under a contract with separate rates for heavy load and light load hours than if?
Mr. Chairman, at this point, I think the council's questions exceed the scope of his questioning on rebuttal.
That's fine. No, he's right. He's right. I have no further questions.
Thank you.
And Mr. Brown?
Has Mr. Uda clarified council's confusion as to whether the rate per kilowatt month for capacity would be variable or fixed? And very generously didn't name names or mention which council is confused. I have no question.
Fair enough.
God bless you.
All right, questions from PSC Council, Ogala.
Thank you, Chairman Koopman. We'll see how many questions I can get out before Mr. Uda objects as being beyond the scope of your initial redirect here. Were you present yesterday for Ms. Muller's testimony on the large generator interconnection agreement between Chafin and Northwestern Energy?
Yes.
Was her testimony correct that the currently effective LGIA is for the prior Caithness Beaver Creek project? The initial 320 megawatt project?
Council, I think technically she said 315, but
Okay.
Can you repeat the question, because I lost you there?
Sure.
When you said prior, so I'm not certain.
Is the current LGIA between Chafin Energy and Northwestern Energy the initial LGIA for the first Caithness Beaver Creek project at 315 megawatts?
Yes, but I just want to just make a point here that how we develop projects, and Chafin Energy LLC is a wholly owned subsidiary of Caithness. You go out and you try and lock up as much transmission as you can, and then you decide how you're going to build the projects to under that LGIA. And as Autumn Miller said yesterday, we're looking at 5 projects. So we initially started out looking at 4 projects. We have reduced, and that would be the full 315. We have now down to 120. So we have quite a bit of megawatts left. And it's Caithness's position, because we like Montana and the landowners there quite a bit, is that we're going to build out that entire site of close to 20,000 acres.
So it's your testimony that you don't think you'll need a subsequent LGIA.
No.
Will you have separate meters for each project? So
Yes, each project will have a Northwestern revenue quality meter on the low side, and there will be a high side meter at the interconnection point, otherwise called a summing meter. But all revenues will be based on that summing meter, and the low side meters will be compensated to the high side. In other words, you take the losses out so you know exactly what is being generated on the low side.
okay, thank you. No further questions. Thank you, Mr. Grant. Chairman Koopman.
Thank you.
Can I just ask you, did you say summing?
Yes, a summing or integrating.
Chairman Johnson, any questions?
No, Mr. Chairman, thank you.
Vice Chairman Lake?
No question.
Commissioner Pinochi?
Thank you, Mr. Chairman. When you were working with Northwest Energy after the last meeting and you wanted to increase the size of the battery, did they give you the battery size?
No, they did not, but they had extensive calculations in the various testimonies before that, where Dr. Doris came up with 92 megawatts, I think, for 315 megawatts. So all we did was use those numbers to size the battery and add some more battery size to that.
Dr. Doris's testimony was you didn't ask him about the battery size and that he needed a sub-hourly report so that he could figure the battery size. But is it your testimony today that you used Dr. Doris's advice on picking a larger battery?
We use his calculations that he had in his pre-filed testimony on the first Caithness.
Do you have a sub-hourly report to give him?
We don't have a sub-hourly report. We don't have a sub-hourly report. That's a fact. What we have sub-hourly data, and we have also looked at that data, and Dr. Siegel will explain some of the findings from that, which satisfies Caithness and GE that the battery is more than adequate.
Listening to Mr. Bobineau and Dr. Doris, Mr. Bobineau thought that a sub-hourly report may help him do a battery model. He didn't say for sure. But Dr. Doris said that's absolutely what he needed. Do you think you could supply the information to him to get that work done?
Oh, certainly. We haven't got a problem. The thing about it is first of all, they say they wanted hourly information, which we provided. And we provided the hourly information in two forms. One was the wind only, and the other one was the wind going through the model to develop what the hybrid project would put out. And that was provided to Northwestern, which was very similar to what they asked for the first case. Now, no one said to us that they wanted sub-hourly. They said they wanted minute-to-minute information. And we said we did not have that. What we had was 10-minute data. So...
Well, that's important. Okay, because he said to figure it out, he needed a sub-hourly report. My question to you is, what formula did you use to size the battery? Your answer to that would be Dr. Doris gave you that?
No. From his testimony, he had extensive calculations. And as engineers, we understand the calculations that he made. Now that we agreed with them, and all we did was use those calculations and say, well, what size battery would be required?
So Dr. Doris supplied you the information?
Well, yes, we got it from the testimony. When I hear supply me, I'm thinking we went to him and he said, okay, here is the information.
Okay, so from the testimony, you sized the battery from
Yes,
his testimony.
correct.
Okay, I think that's important. Okay, so let's talk about the cold kit that is going to be put on these wind turbines to allow them to work in 20 or below zero weather. Okay, in Montana, when we do that to our automobile, we plug in the automobile, and it keeps the engine heated all night long. When you go to start the car, it takes off. If you have dozens of wind turbines with this heat pack on it to keep it warm, are you going to drain all your battery juice before those turbines start at 20 below when the wind starts blowing?
The wind turbines have batches within them for just running those cold weather packages.
Okay, so they have their own battery in there. Okay, that covers that question then. Mr. Chairman, no more questions.
Thank you, Commissioner Pinocci. And Mr. Grant, good to see you up here again, and I hope you have safe travels back to the city, to New York, as the city as they call it back there.
Thank you.
How long have you lived in New York?
I live in Florida.
Oh, really? Well, where did I hear the New York City part?
I work in New York, so I commute every Monday and back on Fridays.
All right, very good. Well, anyway, want to try to stay within, I have only a couple questions, but I want to try to stay within what's proper for re-examination at this point. You were talking about the cost of the project, and I'm kind of confused of what is the projected cost of this, I'll call it CBC2. As I recall, the CBC1 was somewhere in the range of something over 600,000 for 4 sites,
600
4
million.
projects.
Yes, sir.
Was it 700?
600 million.
600 million, yeah. What did I say, 1,000?
Yes.
Wouldn't you wish? 600 million, and obviously it was essentially double the size. What are you projecting for the for this 120 megawatt project?
I understand the confusion, because when I use the term $500 million, I was thinking I was referring to building out the site. For the 2 projects we're looking at now, we're looking just about 260 million.
Okay.
And the reason why we have got to look at it as building out the site and make the decision based on that is, if we were to put all the costs, the embedded costs, on those 2 projects, the numbers would look awful. For example, we have a substation. We're going to we can't build a substation for half the project.
Yeah.
It's got to be a full substation. So what we have done is say, okay, we're making the decision. We're going to go forward on the entire site. And the economics will be based on that.
Okay, thank you for that explanation. I guess the only other question has to do with, partly with, what do you see the technology in the near future, perhaps even at an exponential rate or an ever-increasing rate, technology in the field of not only wind power, but batteries as improving very steadily?
Yes, the technology will improve.
And so my follow-up question to that is it possible that this project is arguably premature? That I think the term I used a day or two ago was jumping the gun, because you're prompted by receiving the tax subsidy, credit subsidy, before it goes away?
No, I don't think so, sir. The issue is this. Even if the battery technology changes, and we've thought about that, we've built in sufficient flexibility so that we're not locked into any single path. We can have a number of glide paths.
Okay. Well, that's my only questions, Mr. Grant. Thank you for that. And redirect, Mr. Uda.
No, thank you, Mr. Chairman.
All right.
Is there opportunity for recross?
And recross. Actually, I should have gone recross first. My mistake.
I was curious whether CBC intends to build out the rest of the site with projects developed as QFs under PURPA.
It depends. For example, if Northwestern had an RFP, we'd bid into the RFP because we think we have a competitive advantage. We understand the market, and we have interconnect. We'll have a lot of infrastructure there already. So that would be a EWG, for example. So it just depends.
I'm sorry, EWG?
Yes.
Can you just define what that means? Or,
Exempt wholesale generator.
thank you, Mr. Chairman. No further questions.
Ms. Hill, yeah.
I have no questions.
Okay, no questions. No redirect, Mr. Uda?
No to redirect, Mr. Chairman.
Okay. Getting punchy this time of day. Mr. Grant, you are now permanently excused, and
Thank you
thank
very
for your
much
time.
for your accommodation, sir.
Mr. Uda, next witness.
Caithness, Mr. Chairman, recalls Dr. Adam Borison.
Dr. Borson,
Hello
you're
again.
still under oath.
Dr. Borison, in the last few days, you've heard testimony from Dr. Doris and Dr. Fitch-Fleischman that the hourly model is superior to the monthly model. Do you recall that testimony?
I do.
And that their conclusion is that the results of the hourly version from Ascend Northwestern Energy should be adopted over the results of the monthly version from CBC. Do you agree?
Do I agree with our conclusion? No.
Okay. Can you please explain the basis of your disagreement?
Sure. And I'll try to be succinct and not too blunt, given the time frame. I've listened to a lot of testimony. I've read the materials earlier. I think it's very important to recognize that the substantial differences between the two approaches, the monthly approach taken by CBC and the hourly approach taken by Ascend and Northwestern, are in very large part the difference of assumptions, not the models. This is critically important. I was under the impression somehow that there was a different and better hourly model, more detailed, and there was a lot of testimony to the idea that somehow that's a better model. Well, as it turns out, based on a fair amount of thought and research and review, that appears not to be the case. It appears that both models are hourly production models, which is good. The monthly model apparently has some different aggregation. That's true. But the basic difference between the two results is the result of perhaps 4 or 5 very fundamental assumptions. So that what you're being asked to do is not really choose between an hourly model and a monthly model, but between a set of what I think are fairly personal judgments made about inputs in one case and your own recommendations in the other case.
Dr. Borison, let me interrupt you there. Can you just detail the differences in the input assumptions that you're talking about?
Yes, I certainly can.
Objection, Mr. Chairman, do we have a quorum?
Thank you for bringing that up.
I move to strike the previous answer from Dr. Borson.
It looks like we'll have to until we get a quorum. I don't know where Randy went. I didn't know, was Chairman Johnson going to be leaving as well?
No, he's going to come back. He told me he'd be back before my time.
Okay.
My clock runs out.
Well, we are in recess until we get a quorum. Okay, we're back on the record. And Ms. Hill, are you requiring Dr. Borson to make the same statement again?
I'm sorry, but I don't know how else to get around this.
Okay, I agree with that. Go ahead.
I'm not exactly sure. Maybe the court reporter can tell me when we lost the quorum, because I'm not exactly sure and where in my question that we lost the quorum.
He's rehearsed all this, right? What's that? He's rehearsed all this? I think so.
Oh,
Maybe I should just plow on.
Chairman Johnson is on his way as well, but we're fine.
Okay, I'm just going to repeat the question.
Yeah.
Dr. Borison, you heard testimony from Dr. Doris and Dr. Fitch-Fleischman, the hourly model is superior to the monthly model. Have you heard that testimony?
I have heard that testimony, yes.
Okay. And their conclusion is that the results of the hourly version from Ascend Northwest Energy should be adopted over the results of the monthly version from CBC. Do you recall that?
I do.
Okay. Do you agree with the conclusion of Dr. Doris and Dr. Fitch-Fleischman?
I do not.
Can you please explain?
Sure. I think it's critical to understand that while there's the impression that there are really two models to be compared, in fact, both models are hourly models. Both are hourly production simulation models. In using the output of the models, there's some difference in processing, which makes a modest difference. What is fundamentally going on here is that the assumptions that were used in applying the hourly model by Ascend and Northwestern are very different, and in fact are both primarily, in my opinion, personal judgments that have not been reviewed by the Commission. or at least not been approved by the Commission. On the other hand, the inputs used by the CBC team using the Ascend model are, to the extent possible, approved, reviewed, and backed up by the Commission. So the fundamental issue here is not two models, but a set of assumptions. And you're being asked to approve primarily not the models, but the set of assumptions.
So, Dr. Borison, is it your opinion that if you were to run both what's been referred to as the hourly version of the model and the monthly version of the model with the same set of assumptions, the result would be approximately the same?
Either identical or nearly identical.
Okay. Can you please explain why that would be the case?
Yes. And that is because the two models are driven by the same hourly detail, and that the only real difference in the hourly model is that it allows the user to put in what I would view as a unique approach to avoided cost. And that is, it allows the flexibility to say, well, in this hour, I will charge 0. In this hour, I will charge X or Y or Z. And that difference, that flexibility is the really only fundamental difference, the so-called hourly cost to serve load. But if you put into that model what I understand has been the approved valuation by hour, condition 1, condition 2, condition 3, you'll get the same answer, basically.
Okay. You'll get the same answer if you use the same set of assumptions.
That's right. And I can, if you'd like me to detail the difference assumption, I can do that as well.
No, I don't think so. That's necessary right now, Dr. Doris. I mean, Dr. Doris, Dr. Borison. It's kind of, it's honestly kind of close. Dr. Borison, you heard Dr. Doris claim that other utilities are regional entities, including Avista, Puget, MPCC, support his view of market conditions. And in part, at least, I believe Mr. Stamets testified that he believed that Dr. Doris had done that. Do you agree with that analysis?
If you're saying, do I agree with his analysis that other utilities agree with his forecasts? No, I do not agree with that.
Okay. And what do you base that statement on?
On what I hope and believe is a thorough review of what other utilities and entities have forecast.
Okay. And what review have you done to either verify or affirm Dr. Doris's statements?
I have reviewed, studied half a dozen or a dozen or more IRPs, presentations, filings from many, many utilities, as well as regional entities like the Northwest Power Conservation Council and others.
Did you look at the Avista, Puget, and MPCC forecast specifically?
I did, yes.
Do they show a declining heat rate and declining market prices over the next 15 years?
No. Some utilities or entities do share the view that heat rate might, in fact, decline somewhat. That's not really the core issue. The core issue is what happens to prices. The Avista, Puget, and NPCC prices in their official forecasts are as much as 2 to 3 times higher than what Ascend has forecast and Northwest Energy has forecast. 2 to 3 times higher in 2035 than his forecasts. So I would not call that an agreement.
Okay. That's all the questions I have for, and I'm going to get it right this time, Dr. Borison.
Cross, Ms. Hill.
I have no questions.
Cross from Mr. Brown.
No questions, thank you.
Questions from Mr. Regala.
No questions, thank you.
And from Chairman Johnson.
No questions, Mr. Chairman, thank you.
From Commissioner Pinocci.
No questions, Mr. Chairman.
I'm hesitant, but I am interested very, very quickly in what the fundamental assumption differences are that you reference.
I'm happy to provide that information. So there are not that many. There are perhaps 4 to 5 very important ones. The first one, which I mentioned, is clearly a difference in view of how to interpret PURPA. And you understand that. I think we've all talked about that. The hourly cost to serve load is more than just saying condition 3 at 0. It has a very substantial effect on the order of $15 a megawatt hour. So changing your view of how avoided costs should be interpreted is very significant. The use of forwards out 6 years as opposed to, let's say, 2 or 3 years, very significant effect, several dollars a megawatt hour. Declining heat rate, incredibly significant. And again, in my opinion, not well supported by evidence. The fact that batteries are not modeled, whether or not it's trivial or not, I don't happen to agree with that, but not modeling the batteries as an important resource. Those, plus, as one that I think Darrell mentioned, the basis differential in transmission is another one. Each of those has a substantial effect in one direction, reducing avoided cost by dollars or tens of dollars.
Thank you. That's just what I need to hear. At this point, ask for any recross.
I have no questions.
Any recross, Mr. Brown? No questions. Any redirect?
No, thank you, Mr. Chairman.
Dr. Borison, thank you so much for your time. You are
Thank you.
permanently excused.
Thank you so much.
Next witness.
Did I say Dr. Segal, or did I say Mr. Nirenberg is going next? Oh, okay, I forgot.
I'll be quick, but
Yeah.
whatever you want to do.
Go sit up there.
Thank you.
Thank you.
I think she gave me one. Can I show you? Seems kind of chintzy. We didn't make one.
What is I here?
What's that? I think he has a point to make. I can't tell you whether it'll be good or not. Has the witness been reminded he's been already sworn, Mr. Chairman?
Dr. Nirenberg, you are still sworn in.
Thank you. Yes.
Mr. Nirenberg, sorry. I'm now attributing titles to people. I apologize. Mr. Nirenberg, have you had a chance to review Dr. Doris's comparison temperature data that he supplied from Bozeman and Billings?
Yes.
Okay. What conclusions, if any, did you reach?
Well, there's a difference that he cites, but I think I can explain what that difference is attributed to.
Can you please explain what that difference is attributed to?
Oh, okay. So first of all, the meteorological masts at the CBC site have a data logger that collects temperature data every second of the hour. So there are 3,600 samples because there's 3,600 seconds in an hour. At an airport, there's a data logger. It's really a computer, whatever you want to call it. It turns itself on at 6 minutes before the hour, and it queries all the sensors. There are many sensors. There's a wind speed sensor. There's a ceiling height sensor, a visibility sensor, a temperature sensor, all of those. And it has to be completed by the beginning of the hour. So it queries the temperature at 6 minutes before the hour, takes a couple of seconds, and then sends that data off. So the temperature data that was collected from Bozeman or Livingston or any airport in the country for that matter is representative of a few seconds at the most at 6 minutes before the hour. If there's a change in the temperature over the hour, then it's not representative of an hourly average. It's representative of a moment 6 minutes before the hour ends. So you're comparing a different beast. You're comparing a true hourly average at CBC versus something that occurred 6 minutes before the hour at an airport.
So how many observations would have been included in that airport data from Bozeman and Billings?
Probably just a few seconds for each of those 22 hours that were in the peak load hours, which is, I think, what we were concerned about.
Okay. Is there any other reason to think that the site for the CBC projects is different from the areas where temperature readings were taken at Bozeman and Billings?
There's significant geographical differences, and in the winter months especially, there are temperature inversions that are very strong, especially on really, really cold periods like we had in the peak load period in 2010. So you can see what an inversion looks like if you go out in the morning and you see the layer of smoke and haze and it's about 20 feet high. That's the inversion. So that occurs more when you're in a bowl, like surrounded by mountains, which Bozeman is. Rappeljay, or where the site is on a ridge. It's a very broad ridge, but the cold air doesn't tend to collect there in the same way that it would collect in a valley. So it's normal to expect in a cold period that anything that's in a valley or a bowl will be much colder. In fact, if you went out in Helena during one of these cold events and you walked up Mount Helena, it would probably be warmer on the top of the mountain than it would be down in town. That's just the nature of an inversion.
And I wanted you to turn you to this page from Mr. Grant's testimony. Do you have that in front of you?
Yes.
Okay. And you heard the criticism from Dr. Doris that CBC did not adequately address the degradation of the GE power curve at colder temperatures. Do you recall that testimony?
Yes.
Okay. Do you have any response to that?
Yeah, I think the problem was that Dr. Doris was looking at the 120 megawatts, which was actually the sum of both the wind component and the battery component. And so for those really cold hours, I think it was hour 11 or something, the wind component is at 113. The wind turbine component is like 111 or 113 because it has been reduced to account for the GE wind turbines being below 15 degrees. There's a decrease in the output. And the 120 megawatts reflects both the contribution from the wind turbines as well as the battery.
Have you also heard testimony from Dr. Doris and I think from Dr. Fitch-Fleischman about severe ramps in wind and how frequently they occur?
Yes, in fact, Dr. Doris stated yesterday that the 60 megawatt ramp, or I think it's called an INC, he said, I think it happens all the time, were his words.
From your review of the data at the CBC site, is that an accurate assessment of the frequency of the ramps that you see in the data?
Not at all. And, you know, we went through this in February when I was here, and I showed a table of ramps and showed that that was something that would occur on the order of once a year or less than 1% of the time, far less than 1% of the time. So to characterize it as something that happens all the time is grossly inaccurate.
That's all the questions I have for now, Mr. Chairman.
And we have cross, Ms. Hill,
I have no questions.
Mr. Brown.
Just so I understand that last Q&A, are we talking about ramps from just measured in megawatts or ramps as compared to what you schedule?
No, ramps from, well, let's say 1 hour time step. So the wind farm presumably being at 120 megawatts 1 hour and 0 the next hour if you're talking about both CBC 1 and 2. And to characterize that as happening all the time is, even without the battery, it doesn't occur that way.
In other words, it's rare for it to ramp 60 megawatts, for the wind to ramp that much.
Yeah, it's like on the order of 0.2% on a time basis, so almost never. If you think of 0.2% of the time as all the time, that's one way of looking at time. But
do you know how often it ramps more than 20 megawatts?
I think Dr. Hollis may have a table in his testimony that can answer that exactly. I presented a table in February that also presented it in 10 megawatt increments. in the previous docket, but most of the changes from hour to hour are in the order of plus or minus 10 to 20 megawatts.
I appreciate that, and I understand now. Thank
And
you.
that was based, on 315 megawatts, and so it would be shrunken if you're talking about a 120 megawatt project.
Thank you.
Mr. Casey, questions?
Thank you, Chairman. Mr. Nierenberg, can you tell me how, or can you tell me about the frequency of wind data collection from the Met towers in place for CBC 1 and 2?
Well, the data collected at the data loggers is every second continuously throughout the year. The data gets sent to a computer via an email every 24 hours. The previous 24 hours gets sent to somebody's computer. I typically see it once a month. Is that what you're asking?
Sort of so. So if it's collecting data every second, is there some sort of a report or something that provides second-by-second wind data that somebody looks at?
Sorry about that. At the end of each 10-minute time step, the data logger calculates the average or mean of that 10-minute for every parameter. So for every wind speed channel, for every temperature channel, whatever you're measuring, it also records the minimum value, the maximum value, and the standard deviation. So it's actually saving 10-minute data, but it's measuring every second during that 10-minute period.
Okay, so there's a report presumably somewhere that details on a 10-minute interval basis all of the wind data collected from the Met towers.
Yes.
Okay. And I think this has been gone over before, but that report or those reports with 10-minute intervals of wind data has not been admitted into this matter as evidence of any kind, has it?
I think not. I think we submitted hourly data, and the 10-minute data didn't somehow get transferred.
Okay. I don't think I have anything else. Thank you.
Okay.
Commissioner Pinocci, any questions?
No questions, Mr. Chairman.
Chairman Johnson, any questions?
No questions, Mr. Chairman. Thank you.
I also have no questions. Any recross, Ms. Hill?
No questions.
Mr. Brown, any questions? Redirect, Mr. Uda.
No, but, if the commission would like the 10-minute data, we can get it to the commission if they want it as a late filed exhibit. I'm just offering.
Let's go ahead and have that, provide that. Why not?
And I think you need to have a procedure to make sure that the other parties can review it and comment on it.
Yes.
Well, we would need to review it and analyze it, and I don't know how long that would take without talking to my people who know what that data is.
Mm-hmm. Well, it's not particularly complex to read, is it?
Let's say for
I think it actually
Is it?
is
Oh,
complex.
I think it's a piece of cake.
something that takes most consultants a while to digest that.
Well, maybe it's not necessary. What's your feeling?
To figure out the effect on avoided costs would be complicated.
Yeah.
My understanding is that CBC is in a bit of a hurry.
I think we could probably pass on it then in that case. Gosh, I thought you guys were smarter than that. Oh, I'm
Can
sorry.
Can I just have
But-
a minute to confer with my client, just like 1 minute?
Yeah, off the record.
Thank you, Mr. Chairman.
Record, and again, I'll ask Mr. Uda if you have any redirect for Mr. Nirenberg.
No, I don't have any redirect from Mr. Nirenberg. I was just conferring with my client about our offer to make the 10-minute data a late filed exhibit. I understand Northwestern's concern about having adequate time. I did want to pose a question to them, and I don't know if you think this would be appropriate on the record or off the record.
Let's go off the record for a moment.
Okay. And how long do you guys think you need to analyze it?
We're back on the record.
Mr. Chairman, my understanding is basic, but my understanding is you take the wind speed, then you get the generation data, then you get how it works with the battery. It's not something that can be done quickly.
Okay.
So,
The battery part has to come from them.
and then the battery part has to come from them. So we can't give you a quick turnaround time on this.
All right, well, Mr.
Can I just have one?
When you say quick, I mean, that's a day, how long you're talking?
We don't want sub-hourly wind data.
Let's go off the record again.
We've been asking for. We don't need sub-hourly wind data.
I think we've resolved the issue, Mr. Chairman. I have no more questions for Mr. Nierenberg.
Hold on, we're back on the record. Go ahead and repeat that, Mr. Udis.
Sure. I think we've resolved the issue. Apparently Northwestern doesn't want the sub-hourly wind information, and I have no more questions for Mr. Nierenberg.
I think maybe more accurately, doesn't feel in the time frame that we're working with here on this docket, doesn't feel like they could use it
I didn't
in
understand
that
that.
period of time. Isn't that more what we're talking about?
I agree with you, Mr. Chairman.
Okay.
In any case, it's not requested. Okay. Mr. Nierenberg, you are permanently excused. Thank you very much. Next witness. If that paper on the wall doesn't stay up, Mr. Grant could wield his shoe. I'm sure that would work. Dr. Segal, you are still under oath.
Yes, sir. Hello.
Dr. Segal, you've heard testimony from Northwestern that there's a concern that you could produce more than 120 megawatt from both sites or 60 megawatts from each site. Do you recall that testimony?
Yes, I do.
Okay. How do you ensure that that doesn't happen?
So let me go a little deeper into the architecture of the overall system here. We have been talking about dispatch optimizer. It runs on a computer. Dispatch optimizer runs on a computer. During operation, it will be run once every minute. And what it generates is the output of dispatch optimizer is set points for the overall hybrid farm. The set point means that generate this amount of power. And that set point is set to the hybrid controller. Now, hybrid controller is another computer. Hybrid controller is a real-time computer, not the fancy one with Windows or any other fancy operating system. What it does is it runs in real time. It operates, it generates signals, control signals every 40 milliseconds. So that is close to real time, 40 milliseconds. And it will generate two control signals. One will go to the wind farm for producing energy from wind farm. The other will go to the battery farm for either charging or discharging the battery. So that is the architecture. We have a hybrid, we have a dispatch optimizer interfacing with hybrid controller controlling individual wind farm and battery farm in real time. It is in the hybrid controller. While it is receiving inputs from dispatch optimizer, the signals of dispatch optimizer are only an advisory. So it is hybrid controller that decides how to divide that power between these two different sources. And there will be a limit set inside the hybrid controller for 120 megawatt, that whatever is the advisory from dispatch optimizer, don't let it exceed 120 megawatt. It's a very trivial piece of code that something is, make sure that it is less than 120 megawatt. So in computer, you can do a lot of things. This particular part of the algorithm is very trivial. The actual thing happens in the real system, which is the wind farm, which is a mechanical system. How do you make sure that that system does not produce more than 120 megawatt, or the battery is simultaneously not dispatching to the grid? So there is the battery control that I said. So I have not spoken about battery control. So hybrid control sends a battery set point or power set point to the battery control for controlling the battery farm. And that again happens very fast. So the batteries can be turned on and off within 100 milliseconds. We are, at all times, hybrid controller is measuring the total amount of power that is going out, right? So batteries can be shut off or shut on or turned on very quickly. The next mechanical system is the wind farm, which has wind turbines. Now, wind turbines, we cannot arbitrarily increase the power from wind turbines. There is wind coming. We can probably move the wind turbines to extract maximum amount of energy that they can get from wind, but beyond that we cannot extract any more energy. But we can always derate the turbines in less than 10 seconds. So if the wind farm is producing 120 megawatt and there is strong wind, even in strong winds, we can go down from 120 megawatt to 0 megawatt in 10 seconds time. That's a mechanical system. We can shut down that mechanical system in 10 seconds. This process is called derating the wind turbine. And this is done by pitching the three blades of the turbine. So we have enough controls available to us to keep the output less than 120 megawatt in real time. So that's how Mr. Yuda will be able to ensure that the output is never more than 120 megawatt.
Okay, so I'm hoping that the next answer is a little more succinct.
Sorry about that.
How do you ensure that the battery does not get charged from the grid?
Okay, so that again, the hybrid controller is measuring. It is the hybrid controller that decides what command goes to the battery. And hybrid controller is also measuring how much power is coming out of the wind farm. And let's say we are trying to charge the battery. Hybrid controller knows how many megawatts the wind farm is producing. It's a very simple operation of comparison about how much power it should allow or what kind of set point hybrid controller should send to the battery farm for charging. Just keep that value low. That's again just one line of code.
Okay.
So
I'm not sure I understood your answer.
Okay, so hybrid controller is getting information about how much power the wind farm is generating, and it also has information of that what is dispatch optimizer's recommendation of charging. So let's say dispatch optimizer says that charge the batteries at 30 megawatts, and the wind farm is generating only 20 megawatts. In this case, if hybrid controller does not take an action, we will be drawing 10 megawatts from the grid. But the hybrid controller knows that we cannot charge from the grid in this project. So there will be just a comparison that will be done.
Is that another line of code in the?
Just another line of code, very trivial part of the code.
Okay. It's been stated, I think, several times over the last few days by Northwestern's witnesses that the role of the batteries is primarily in sub-hourly services, and they provide very little value for energy shifting. Do you recall that testimony?
Yes, I do.
Do you agree with that testimony?
No, I do not. I do not agree with that characterization, and the reasons are as follows. I stated that we can always reduce the wind generation from completed rated power, 120 megawatt to 0 megawatt in 10 seconds, 10, 15, or 12 seconds, very fast. So we have very good control of that. Now think about hours where the low load hours, let's say early hours, midnight to 4 a.m. In all the analysis that I've seen from Northwestern, during those hours, there is no, when they have done this avoided cost of energy calculations, they are showing that CBC is producing power, but that power is not being used. And the reason they say it's not being used is because they have enough generation of their own that power doesn't need to be used. CBC would know that. CBC knows that these hours are not important for Northwestern. So what the operation that CBC will do is CBC will commit to provide 0 megawatts of power. Now, when we are committing to produce 0 megawatts of power, where is the generation going? It's going into the battery. And if the generation is higher than what the battery can take, we can derate the turbine almost instantly, or 10 seconds. So in that way, what we have done, we have managed to shift the wind energy into the battery without causing any extra burden to Northwestern, because they don't need any service. They need the spinning and non-spinning reserve, and that is always kept rationed. We are not touching that. We are not talking about that. I'm only talking about the 36.4 megawatt of power that is used for firming. So when we are saying we are going to provide 0 megawatt of power to the grid, and there is generation, at that point, we are automatically firming, just without using the battery. We are firming just by derating the turbine in case there is more generation. Now the second part is, now we got to transfer this energy into the grid at some point, right? So let's say during some high load hour, or hours that we have estimated to be peak load hours. I believe one of the very key important aspects that was underreported or underemphasized in NWE's analysis was the aspect of forecasting. So when we commit power, we are also forecasting. We are looking at the historical data, historical wind data, and then we generate a forecast of what's going to happen, what we think will happen in the next hour or next 2-3 hours. Purely statistical analysis we do. We also look at some wind speed data, and we predict. And anytime you forecast, there are forecasting errors. But we are close. We are, in my testimony, I have presented that we are, I think we had a 6% mean absolute error. So we are within 6% of what we forecast. And it's a short-term forecast, so it's easy to be right. And that was for an hour-long window. Once we move to an EIM market, then it's just 15-minute window. There we will be much, much closer to what we forecast. So anyways, we have the forecast, and we did hourly analysis. So when we did hourly analysis, we had the hourly forecast. If we want to do 10-minute forecast, if we want to do forecast for an hour in 10-minute resolution, that also we can do. But here, because we were doing hourly analysis, so whatever 10-minute resolution I was getting, I would average it and call it, that's the forecast for the whole hour. So now, once we have the forecast for a whole hour, based on that, we also know how much power we have in our battery, how much juice we have, what is the state of charge of our battery. So we combine that knowledge to come up with a commitment that this is what we will provide. And that's where battery comes into play. So battery, that 36.4 megawatts of battery that we are keeping for power firming, it is providing the ancillary service as well as helping us to shift the energy at the same time. So that's where I say that it doesn't have batteries are useful for sub-hourly services, but they also play a key role in energy shifting if used wisely.
Do you agree with Mr. Steinmetz in his testimony that battery-augmented firm output can cause DEC issues when Northwestern is long on power in the operating hour?
I do not. And that is once again for the reason I said that batteries you can shut down in 100 milliseconds. Wind turbines you can shut down in 10 seconds. So technically I do not see any problem even if, let's say we have committed to produce 80 megawatts of power from both the farms and Northwestern is long on energy. And what I heard from Mr. Steinmetz was that they have their own generation. They would call their generation and ask them to curtail. They are welcome to call CBC and ask them to curtail too. I mean, it's actually a win-win for everyone. So CBC has committed, they get paid because they have committed. They can cut down the power to help Northwestern's resources. Resources as in the physical limitations on the line. And I see it as a win-win for ratepayers, for NWE, as well as for CBC.
And do you understand, Mr. Steinmetz testified yesterday that Northwestern has near real-time information of balancing area load?
Yes, I do.
Okay. Would that information be useful to CBC in operation of its project in estimating peak load hours?
Oh, yes, absolutely. And the reason is, this is what Dr. Fleischman also said, and Mr. Steinmetz also mentioned, that they have two kinds of customers. One is choice, and so one only gets transmission through NWE, the other gets transmission as well as generation, their power from them. If I recall correctly, I think, Dr. Fleischman, you said 1/3 of them are choice pairs. So let's say 33% are choice pairs, and the remaining 67% is who is deriving their load from them. Now, the 67% number doesn't change very, very quickly. It's not that today it is 67% and tomorrow morning it will be, everyone is going to make a choice and it will be 5%. The 67% will change very slowly over a period of time. In 2 or 3 months' time, when they get correct data, we can always update the 67% number. So whatever information they have for balancing area, which is in real time, that's good enough for us. We can scale up the load up and down just based on that information. We will be happy if we can get information, even if not in real time, the previous days. It will only help us. It will only help NWE. It will only help ratepayers, because then we will be providing power, or we will attempt to provide power in the hours that are going to be most useful. If they cannot provide, then I have done my analysis based on the past year's data. That's all right too.
Okay. How confident are you that the battery has enough capacity to provide sub-hourly firm power?
I am quite confident about it, that it can do sub-hourly services well.
Okay. And why do you have that opinion?
That's actually a very important question, and I completely understand Northwestern's concern about it. Sub-hourly, they want to know that if the wind changes by, let's say we are going from 0 to 120 megawatt within an hour, and we have, then how can we ensure that the battery will be able to provide it, given that the battery can at most provide even what we are saying is 36.4 megawatts. So I looked at the hourly variation data for this site for the whole of 2018, and I found that there were only I think they were less than, as Ron also said, there were only 0.02% of the cases where this was happening. Actually, let me take that back. I noted down some numbers. I got confused with that. So we looked at how often does it happen that the wind goes from 0 to 120 within an hour, and there were less than, I think, 3 or 4 cases in a year. But that I'm talking about very high variation, 100 to 120. But when you talk about variation from, let's say, 75 to 120 megawatt of variation within an hour, I found 50 hours. 65 to 120 was 92 hours. And I'm going to be using this chart to explain how that what gives me confidence about it. So I'm going to draw a wind profile for an hour. Let's say the hour begins here, 0, 15 minutes, 30 minutes, 45, and 1 hour. And I'm going to go with an extreme case where, and I'm going to go with an, they won't be able to see the things like it. Yeah, I'm going to go with an extreme case where this is power generation by wind, or wind power, and in megawatts. Let's say this number is 120. Now I said there were only 4 or 5 cases that I found which were above 100 megawatt variation within an hour. I'm making an even more difficult profile where it goes up and then comes down. So this is 2 times the wind is changing by, wind power is changing by 120 megawatt. Now let's say I was doing an hourly analysis. Now this triangle is such that half of the time the power is over 60 megawatts. So let's say this is 60 megawatts. If I was doing an hourly analysis, what I would have done is, and at this point I'm going to assume perfect forecast just to keep things simple. And we can get into bringing in forecast errors too. But for now, let's just think about that it is perfect forecast. And if I was doing hourly analysis, what I'll see is I will predict this kind of a profile. The average value is 60. And based on 60, maybe I'll say that I'm going to commit to 60 megawatt of power. Now what happens with this is, at this point, there is no power from wind. From battery, all I can provide is 36.6 megawatt. And this is a problem that Northwestern was highlighting. It's a genuine problem, but there is an easy solution for it. I'll come to the solution now. So what they are saying is that, well, you can only provide this much amount of power, and we want to see firm power. They don't want to see 36.6 here, and as the wind ramps, then I'm providing 60. That's not what they want. They want firm power, not such a huge ramp. 36.6 to 60, there is a 23 megawatt ramp there. That's not what they want. So the answer lies in forecasting. This is where the answer lies. For sub-hourly services, for sub-hourly analysis, we will be forecasting also, which will have 15-minute resolution, or it may have 10-minute resolution. So let's say it has 15-minute resolution. When I have seen this kind of a profile, I know beforehand, before committing, that there is no way I can provide firm power at 60 megawatt. I'll commit to providing, let's say, 40 megawatts, and not 60. So, and why 40? Because I have said that our definition of firm power is that we are within 3.6 megawatt of our commitment. So in that case, there is 36.6 here, which is within 3.6 megawatt, and as it builds up over here, so in this part, battery is going to be providing power. Once we reach here, what I'll start doing is, going forward, I'll be charging the battery here, because here the wind is more. I only have to provide this amount of power, so whatever is additional, that goes into charging. Once I reach a state where battery cannot take any more power, I derate the turbine. So what happens is, at this power, shed it, derate turbine. That happens within 10 seconds. So at no point will I will I be, so I'll always be within plus or minus 3.6 within this band. I'll always be within this band. And that's how we can provide sub-hourly service after looking at the wind data, after looking at the sub-hourly wind data. Now I know I may have
Dr. Segal, I think your explanation is adequate. Mr. Chairman, no more questions from this witness.
Questions from Ms. Hill?
I have no questions, thank you.
Questions from Brown, Mr. Brown? Questions from staff?
Thank you, Chairman. Good afternoon, Mr. Segal. I have two topics to cover with you. I will try to move through them as quickly as I can. So I believe in your answers to Mr. Uda's questions, you indicated that the data you used to assess or forecast battery performance was that data that's collected in 10-minute intervals, right?
Could you repeat that?
The data that you used to forecast battery performance was collected in 10-minute intervals.
Correct.
And I assume it's generated from that same wind data that Mr. Nierenberg referenced was collected in 10-minute intervals from the Met Towers, correct?
Yes.
Okay. You recall an Excel spreadsheet that was given to you the first day of this hearing?
Yes.
I think it was introduced as Northwestern Exhibit number 2.
Yes.
Okay. And that spreadsheet provides battery forecast analysis on an hourly basis, correct?
Correct.
Okay. So does this spreadsheet, is that derived from the 10-minute interval data?
Not the spreadsheet. Only the forecast was derived from that, but all the analysis was done on an hourly basis.
So this Northwestern Exhibit number 2 does not incorporate that?
No.
That data collected at 10-minute intervals?
No. This is, okay, so this spreadsheet, there should be a column for forecasted power somewhere in that.
I'm gonna have somebody hand you the exhibit so that you can look at it with me. Thank you. Sorry about that.
This is column C.
Okay.
So column C was generated using 10 minutes interval wind data, but then average it for the whole hour, because I'm doing only hourly analysis of that. How should the battery go up? What should happen to the wind turbine? Should the wind power be shed and all that? That is being done at.
Okay, so your forecast information in Northwestern Exhibit number 2 does include, or does incorporate that?
Yes.
Data collected at 10-minute intervals?
Yes.
Okay. But this data on this spreadsheet is different from the intra-hour variability of that data. And that's obviously become quite an issue in this proceeding. So I'm curious as to why you haven't submitted up to this point information on the intra-hour variability of power generation.
Right. That's because that analysis was not done. Whatever I'm telling you is I used 10-minute data for forecasting, but I did not actually look at the 10-minute data. It was just put it in a tool, get the answer, average it. It is only day before yesterday night, after listening to testimonies from Dr. Fleischman and understanding their concern that they really want to know about this, that's when I looked at it, and whatever I presented here on the chart, that tells me from a technical standpoint that is not going to be an issue.
Okay.
Earlier it was my strong belief. Now I'm confident about it that forecasting plus derating, these things can easily take care of it.
Okay, I just want to make sure I understood you clearly that you said you did not perform any intra-hour variability analysis.
if you mean operational battery operation, yes.
Okay.
Your understanding is correct.
What did you submit to Ascend to run through PowerSim? Was it this hourly average data, or was it the 10-minute data?
I never interacted with Asin. That question I think will be should be directed to Adam or Keith.
Okay. Fair enough. Okay. I'd like to ask you a few more questions about this spreadsheet, Northwest Exhibit number 2.
Mr. Chairman, just to clarify the record, I believe it's Northwestern Exhibit number 1, and I just don't want there to be confusion.
I apologize. I thought she introduced the non-colored one first.
I guess the record will reflect going back, so let's just move on.
Okay. Thank you. Whichever exhibit that is, it's the spreadsheet that has the highlighted rows on it. In either my or Ms. Hill's questions to you at day 1 of this hearing, I believe, never mind, let me move on from that. So the rows on this spreadsheet that are highlighted in yellow, those are hours in which actual power from wind turbines and batteries that are delivered to Northwestern falls short of CBC's scheduled commitment, correct?
Correct.
Okay. So regarding column J of this table, is it accurate to say that the values in those in those cells represent firming power that Northwestern's system will be required to make up due to insufficiency in what's delivered by CBC?
That is correct.
Okay.
So the stats on that is 1.2% of the times you were missing, and I think if you increase the limit to, I think, 5 megawatt, here it is 3.6, the percentage goes down to around 0.8.
Okay. Is the shortfall in column J, well, you've already stated that the shortfall in column J is expected to be made up by Northwestern. So I'm curious what the avoided cost implication is of Northwestern making up that difference.
I have not done any avoided cost calculation. I cannot answer that question.
That's fair. So in, I believe, all of these yellow columns, it appears that shortfall includes your 3.6 megawatt margin of error. Do you agree with that?
Yes.
Okay.
This is not on top of that, yeah.
So does your optimizer automatically, to use your term, clip delivery at that 3.6 megawatt margin of error, even if the power is available from the CBC system?
Could you repeat that?
So the power that's delivered in column I, or the difference between that and what's committed, it includes that 3.6 megawatt margin of error.
Yes.
And it appears to me that, or it seems to me that your optimizer is clipping what's delivered to include that 3.6 megawatt margin of error. Does that happen whether that power is available to be delivered or not?
Yes, that's actually a very astute observation. So the reason it does that is because that is the tolerance that it is aware of, that it can stay within that tolerance, and it allows us to remain within that tolerance in the next hour too. So if there is a possibility that it can deliver, it will also look at the next hour. If it feels that maybe next hour it's likely to miss, so it will try to do that.
And that's how you anticipate the battery performing in real life?
Yes.
Okay.
But to add to that, I mean, we have another year to go, so we may improve it. Not we may, we will definitely be working on it to improve it. But at this point, that's how it is working.
Okay. I frankly don't recall who testified to this. I believe it was one of Northwestern's witnesses, but with regard to these rows that are highlighted in yellow and green, I believe that witness testified that there were approximately around 2 weeks worth of hours of those rows in which the difference between what's committed and what's delivered exceeds that 3.6 megawatt margin of error. Is that accurate?
2 consecutive weeks?
Not 2 consecutive weeks, 2 weeks total, 300 and some total hours, I believe.
Oh, no. It was Dr. Lahiri.
Okay.
It's actually 108 or 120, one of the two. I think it's 108 hours. It's not 300 hours. So the 300 hours number came from one of the data requests that NWE had, and I had sent them an Excel sheet in which I had incorrectly copy-pasted one of the columns. So, and then I presented an errata. After they pointed out, it was, I think, Dr. Lahiri who pointed out that your values are off. So then I looked at it. It was just a copy-paste error. The correct number is, I think, 108 hours, which works out to be 1.2% of the total number of hours. So we are within the tolerance limit that we are claiming for 98.8% of the times.
Regarding the rows that are highlighted in green, I believe you indicated that your hybrid controller moderates the dispatch controller so as not to allow production over 120 megawatts, correct?
Yes.
Okay. Does the hybrid controller similarly override or moderate the dispatch controller in some way when CBC falls short of meeting its commitment for a given hour?
When CBC is short, no. Then the idea is to extract maximum energy from wind turbine and whatever juice the battery can provide to meet the shortfall.
You're just delivering whatever you've got less that 3.6 megawatt margin of error.
Right.
Okay.
Actually, we try to produce more. We try to hit the upper side of 3.6. I mean, on the upper side, if we think that it's a peak hour, because it'll be more useful for NWE.
I think that's all I've got, Dr. Sehgal. Thank you. Thank you, Chairman.
And Commissioner or Chairman Johnson, do you have any questions?
I do not, Mr. Chairman. Thank you.
Commissioner Pinocci, any questions?
Just one. When you were sizing up the battery, did you use the advice from Dr. Doris on the testimony he gave a few months ago?
No, I did not. I got the numbers from Mr. Grant, and I also did my own analysis to see if this was properly sized for what we were trying to achieve, and it seemed correct to me.
It is properly sized in your opinion?
Yes.
Dr. Doris put some numbers subtracting the energy from the battery,
right,
and came up to something that was almost zero.
1.7 megawatt.
Do you agree with that, or do you think there's more power in that battery than that?
There is a lot more power, and so he said that there is only 1.7 megawatt of power capacity left in the battery to do energy shifting. And as I explained earlier, what happens is if we commit to providing only 0 megawatt to Northwestern during certain hours, the entire battery is available to do whatever we want to do. But at that time, what we want to do is we want to capture energy from the wind and put it in the battery.
Okay, my question is this. He had 1.7. What would your number be?
36.4.
Okay, that's a big difference. No more questions. Thank you, Mr. Chairman.
Thank you, and I have no questions. Any recross by either intervener?
No more questions.
And redirect, Mr. Uda?
No, thank you, Mr. Chairman.
I'll have you know I've missed my my meeting time, but I'm just hanging in there because we have to have a quorum. That's okay. We'll just go as long as we need to go.
I appreciate your indulgence, Mr. Chairman.
And Dr. Segal, thank you very much for your time and the great illustration up there. It was all very helpful. Thank you.
Yes, sir.
Next witness.
You can take it up if you want.
Did you indicate?
Oh, I guess not. Dr. Segal, by the way, is permanently excused at this point.
Isn't that already in the record, though? Thank you. Okay, I'm not going to ask that.
Fired yet?
And I will, again, admonish you, Mr. Durand, to be as succinct as you can be in responding to these questions. Do you understand that?
I do.
Okay.
Can you hear me?
Yeah, I can hear you. Mr. Durand, were you present when Dr. Fitch Fleischman stated that CBC doesn't understand issues such as the Mid-C to Montana price differential and transmission charges faced by Northwestern in selling power to Mid-C or in purchasing power from Mid-C?
I was.
Okay. Do you specifically recall him stating you were wrong in your rebuttal testimony in using the term pancake transmission charges, and do you have a reaction to that criticism?
I do.
Okay, what would that reaction be?
Well, I'll start by saying that we started this whole process trying to make sure that we were following what had the same procedures that had been approved or in the past commission proceedings. And we had used or calculated that there would be some charges based upon historical differentials between Mid-C and Northwestern. We use the term pancake because the bottom line is we don't really know what was going into it. We do know that there was a charge for power going over, the differential between a sale price and a differential between the purchase price. And there was another fairly substantial point-to-point charge, which is not completely defined. The total comes up to about $8.
Okay. And do you have concern about that $8 charge?
Yeah, because except for the two differentials between purchases and sales, there was the $6+ right? I think I've written down here. Works out to be, in terms of the impact on the avoided cost, it comes out to about $3 reduction in the avoided cost.
Is this way of calculating the price differential from Mid-C to Montana consistent with your understanding of prior orders?
No.
Can you explain?
Well, in prior orders, we had charges, we had the differentials, and we had calculated them in the past, and even the in response to our data request of CBC 07A, there was a listing from Northwestern of the charges. There was about $1.19 for purchases, $1.86 for sales. These were the differentials between that we accounted for in the past, and I think you've got it there. So but the 653, the point-to-point, was not clear, even although it was Dr. Fitch Fleischman made clear that this was a charge that applied when we were selling into the market, not when we were purchasing. So those charges would be applied to CBC during those sales.
Okay. And did you understand do you have CBC 07 in front of you?
No, I had it. I can get it.
Anna, can you please get that for him?
I think Bobby's going to get it for him.
Oh, thank you.
Thank you.
Do you have CBC 007 in front of you?
Yes, I do.
Okay, is this the response where Northwestern calculated a price differential based on the transactions of $1.19 a megawatt hour for purchases and $1.86 a megawatt hour for sales?
Correct?
Okay. Is it also the case that they list line items in the table labeled PTP transmission costs with a value of $6.53 a megawatt hour?
Yes?
Okay. And transmission losses of 79 cents a megawatt hour?
Yes.
Do you know what those charges represent?
Well, transmission losses, I think, is clear, but I'm not sure where they got that particular amount, but I understand what transmission losses are. The point-to-point transmission cost, I'm not sure where that came from.
Okay. Do you know of any of Northwestern's primary transmission interconnections?
No. Well, like BPA is a big one.
Okay, and do you know what BPA's short-term firm and non-firm point-to-point
It's,
transmission tariff is?
About $4.40 a megawatt hour.
And did it cause you any concern that some of the detailed transactions provided by Northwestern were settled in Montana so there would be no transmission charges?
Well, I recognize that that's a possibility. Yep.
Is it the case that some of the mid-sea transactions were likely with entities already having firm transmission?
That's a good possibility, too.
Or utilizing headrooms in Northwestern's already existing transmission rights?
And that's a good possibility.
Okay. Right. Are there any other issues that raised concerns for you in this proceeding?
Yes. Besides this one, which was about $3 a megawatt hour hit to the avoided cost, the other big issue was the change. And again, we're talking about changes in the methodology that we've used and that the commission has approved in the past. The second one had to do with this change of increasing the mid-sea forward prices out to about the end of 2024. And that one, a quick analysis of that showed that there was a hit there of about $8 a megawatt hour.
Okay.
So combined, it's about $11.
Okay. Are you referring to the ICE mid-sea strip?
Yes.
Okay. Do you have an opinion about whether or not Northwestern's position on liquidity in the mid-sea price strip is supportable by common understanding of economic principles?
I actually worked with forward pricing quite a bit during the energy crisis in California. And when you got out beyond 2 years, there were always some offers out there. But when I talked to the traders and the gas marketers and stuff, they said mostly that was people fishing to see what prices the market was going to respond to.
And what sort of liquidity did you see when you did your analysis of the transactions at ICE mid-sea?
The offers get down to about 25 contracts beyond 2021, and then they drop off around 2026.
To what?
0.
Okay. And between 2021 and 2026, what does it look like? Is there a lot of interest?
Well, no, there's just offers at that point. Oh, I mean, they're offering 25 contracts.
And so in the first 2 years, what sort of scale of transactions are taking place in that first 2 years?
Well, it's pretty significant. If you look at my testimony, my rebuttal testimony, page 9 and 10, or 8 and 9, you'll see that we have, I know this doesn't help you, but you'll see the amount of volume and it's pretty significant in the first 2 years, then it drops down and there's nothing after that.
Okay. I believe that's all the questions I have for this witness, Mr. Chairman.
And any cross by either Mr. Brown or Ms. Hill at this point?
No questions.
No questions.
Questions from Mr. Casey?
No questions, Chairman. Thank you.
Questions from Commissioner Pinocci?
I asked them all the questions 6 months ago. No questions, Mr. Chairman.
And Chairman Johnson, questions?
No questions, Mr. Chairman, thank you.
I likewise have no questions. Is there any redirect, Mr. Uda?
I don't think there's anything to redirect, so the answer is no.
All right. Well, then, Dr. Durant,
Doctor.
you're also a Mr. That's all right, so am I. Mr. Durant, thank you for coming, and you are permanently excused.
Thank you.
Mr. Uda, next.
I believe that closes our rebuttal case unless I missed somebody.
At this point, I'll give opportunity to the parties to, beginning with Mr. Uda, to provide a closing comments if you have any.
I'm going to keep this really brief because everybody's been here a long time, and I don't want to try everybody's patience more than I already have. The only thing that I would say is that qualifying facilities are in an awkward position with respect to how to approach these cases, because we have a commission order on how we create a legally enforceable obligation that says that we have to come up with a price that's consistent with Northwestern's avoided cost. And I believe, as Mr. Brown accurately stated, that this seems to be the foundering point at which disagreement arises as to how that price is to be estimated. And we've tried different approaches. I believe, in my own view, that production cost modeling, for a variety of reasons, is superior to the power sim model. Nonetheless, my client, in an effort to reduce areas of disagreement, decided to authorize Mr. Duran to interface with Ascend Analytics to have them perform the power sim estimates, utilizing the prior CBC order, saying this is how the commission views what must be done. In that instance, that was the only way that we could attempt to estimate what we thought Northwestern's avoided costs were. We had no idea what the outcome would be. All we knew is that we were going to follow that methodology. We were going to leave it up to Ascend to do all the spreadsheet work at the end of that. And then we would use that as the avoided cost, because this is what we understood it to be. So we filed our case, and obviously Northwestern doesn't feel that prior commission cases, I don't think Mr. Brown feels that they should have to follow prior commission precedent. We don't have any choice, because if we do something that's at all inconsistent with the commission method, you will be sure that we will hear about it. So we used the commission methodology. We had nothing to do other than give the input assumptions, which came from prior commission dockets, to Ascend Analytics. They ran the model, they come up with a number, and then all of a sudden, well, it's not good enough. Okay, now we need to have a declining hourly heat rate utilized, which I believe the testimony in this hearing has shown is not supported by anyone other than Dr. Doris. No price forecast, Dr. Borison has testified, shows declining market prices in real terms over the next 15 years. According to Dr. Borison's testimony, what Dr. Doris is suggesting is that power will be sold at a 40% discount in price within 15 years. If that's the case, no new projects will be built in that period of time. No one can afford a $15 megawatt hour round-the-clock price and construct new construction. Not Northwestern, not anybody else. 15 years at $15 around the clock is pretty severe. It also suggests, if you have that kind of a declining heat rate, and I think testimony was actually had from Northwestern on this, a lot of thermal resources become economic, including coal, because you're operating coal plants that are operating at far in excess of that price. And you're choosing then between keeping older resources operating and having the consumers pay the difference. What I'm suggesting is this is not realistic. I also believe that when you look at the other adjustment that they made, which is this hourly model, I believe Dr. Borison to be correct. It is not a choice between the hourly version of the model and the monthly version of the model. It's a matter of whose assumptions you believe. Because I believe that if you kept those assumptions constant and ran the hourly model and ran the monthly model, the result would be very, very close. There are other issues that we have that have been raised in this proceeding. Well, they're not happy that we didn't do what they wanted us to do with respect to calculating within the hour. I think Dr. Sagel has made it clear that he doesn't think it was necessary, and his analysis showed that it wasn't. The battery will perform exactly the way that we say it will. It will firm power. It will provide ancillary services. It will do everything that we could do. Again, we based the size of the battery for this size of wind project based on calculations from Dr. Doris in the last CBC proceeding. But we seem to constantly be playing a game where we start the game and all of a sudden the rules start to change. Nothing that we do is quite good enough anymore. And there are a variety of other issues that I can get into, but largely what this comes down to is the question that Commissioner Johnson asked. Chairman Johnson, I apologize, sir. It's late in the day. Why is there such a big difference between your estimate of avoided cost and Northwestern's? Because we followed your order. That's why there's a big difference. And we can talk about, whether you believe that they're going to ever exceed an hour. I think Dr. Segal's testimony is largely consistent with Dr. Lahiri's testimony. I think the project will operate the way that we suggest it will operate. With respect to the capacity contribution, and this is really important, they could have done the estimate of the capacity contribution using the SPP methodology. You've heard testimony that it's not a battery. It's a hybrid facility that is designed to firm the output from the wind. So all you're doing is measuring the wind output. And within the SPP methodology, they tell you how to do that. You just have to assume that the wind is being deferred from the off-peak hours to the on-peak hours. That's all it means, okay? Why didn't they model the battery and their avoided cost estimate? Well, they say, well, it wouldn't really have made much difference. We don't know that. They never did the analysis. And the question comes down to this. What else were we supposed to do? We had your order. We used the company that we understood the commission preferred to do the avoided cost analysis. We didn't have anything to do with that estimate. We just basically had it produced. My experts think that it's exactly what it should be, even though it's higher. But we shouldn't be just about results. We should be about following the proper methods and ensuring that what we're doing is based on actual evidence and sound science. I do not believe that we have done anything remotely improper in what we've done here. What you have is us saying we should be able to rely on your order and them saying, well, we think there should be improvements to it. God bless them. Maybe there should be improvements to it. The question is it fair to apply those changes to this application and this proceeding? Think of it this way. The only order we had to go on when we filed our application, the most recent one, was your order in the first CBC hearing. What else were we supposed to do? So we're here today and we're saying we think this is a really good project. We think it will provide value. For years, when I practiced in front of the commission with just wind projects, I would hear, not from you guys because this was a while ago, the commission would say, it would be great if you guys just had a battery. And now we have a battery. But again, that's not good enough. So this time, if we get an order that's adverse, are we supposed to come back a third time and say, all right, well, now we have a 20 megawatt wind farm and a 30 megawatt battery. Is that good enough for you? I don't know, but I do know this. This project is a good project and it'll provide value. And also, it will be the first one of its kind at least in this region. I don't know about anywhere else. And I really do think that the amount of time and effort that GE and CBC have put into this shows you how very, very serious they are about it. These are not prospectors. These are people who want to be in this business to earn a reasonable rate of return and provide value to Northwestern shareholders. And with that, I think I've talked way too long. Thank you, Mr. Chairman.
Thank you, Mr. Uda. I have to say, even when you're really tired, somehow you find a second wind, and you did a fine job. Thank you for the statement. Next we'll go. Let's go to Mr. Brown. Do you have any kind of a closing statement, Mr. Brown, for the MCC?
Mr. Chairman, it may not surprise you that I disagree with Mr. Uda's characterization of my opening, which I think speaks for itself. I don't have a closing. I'll save closing remarks for my brief. Thank you.
Thanks. And Ms. Hill, do you have a closing statement for us?
No, thank you, Mr. Chairman. I'll summarize our arguments in our brief.
All right. Well, we will go off the record for time while the attorneys can talk about scheduling and so forth. But before we do, let's ask one more time if there is any public comment. If so, please come forward. I see no public comment. So let's go off the record while the attorneys get a chance to confer, and then we'll go back on the record. We are back on the record. And what have the attorneys come up with here that can be noted for the record here?
I think Mr. Casey has the...
Very good. Mr. Casey.
Thank you, Chairman. As I understand it, the parties will be submitting simultaneous post-hearing briefs on November 22nd.
I thought we agreed on the 21st. Okay, 22nd. I'm sorry.
Thank you, Mr. Chairman.
I wasn't paying attention.
I guess that's it then. Thank you all for really an excellent hearing with a lot of quality testimony and cross and so forth. And at this point, this hearing is closed.
Thank you, Mr. Chairman.